I hope you are able to see my screen.
Yes.
Definitely.
Yes, yes, yes.
Yes, yes.
Okay. So today I'm going to present an emerging fintech company with SaaS capabilities. So most of you know that I generally don't prefer finance companies or NBFC companies, but it's a kind of a fintech company which is having a software as a service capability as well. So let's start. The company name is Zaggle Prepaid Ocean Services. So my key investment thesis behind this is it's a differentiated platform with strong network effect. So network effect is something which once is in place, it will automatically start generating more customers, more revenue, and that will flow to the more customers again, and then again more revenue further. And it has a comprehensive suite of products which will address a large and growing addressable market. That is very important, total addressable market size for it. And now company has amazing cross-selling and upselling opportunities across domains. So it lies somewhere between the fintech and SaaS, and it is also will become part of my Diwali to Diwali picks. Tomorrow I will be sharing it on the Twitter handle as well. And I'm invested in this. I'm fully biased, and I started my position some time back, but the company has not made much progress in terms of stock price movement because valuations were a little bit costly when we started it. But it is surviving all the panics in the market and trying to hold on its own. And once the supply is absorbed, I think it should be able to move forward. But let's focus on business instead of prices. So what Jaggle does as a business, it provides financial solutions and products to manage the business expense of corporates, SME and startups. So now a lot of MNCs, corporate businesses have some certain expenses going on daily basis. It could be on the business side, it could be on the employee side, but how to manage that, how to track that? This company provides that solution for those kind of expenses and try to automate it in a workflow. So it is based out of Hyderabad and it is trying to do the usage of both software as a service as well as fintech. Strength wise, it has 273 employees plus and 50 million plus cards have been almost. It is into prepaid cards basically. Now it has three products. So one is Zoyer, another is Save, and third is Propel. So Zoyer is for accounts management. Save is for how you can help the employees for saving tax and flexible employee benefit plans in the companies. So most of MNC companies nowadays are going in flexible benefits instead of having a full components as a base salary basically. So there are two components in the MNCs right now: basic salary plus flexible benefits. So Zaggle Save helps there. Zaggle Propel is kind of all the reward system. So company gives some vouchers, company wants to give you prepaid lunch cards or some gifts coming out of certain events that they're trying to give in this. Now, this could be a smaller part. Now imagine a bigger company, a transport company that wants to track the expenses done by its drivers when they're moving from Kashmir to Kanyakumari. Let's say a company has a truck and a driver, and they want to track where he will spend it across its journey from Kashmir to Kanyakumari. So currently the model or the previous model was they will be handing over the cash to the employee or the driver and he will spend it and report it back. But now they have tied up with the certain places on the way, on the route, and the driver has to only go to those places, get the tank refilled, get the things done, and they will be able to manage, okay, these are the places where these expenses has been done. This is the amount of expenses. They will get some trend analysis. They will be able to figure out the efficient way of doing the things transported from one side to another. This is one of the examples where they have tied up also. So Propel has a larger picture as well in the market. It's not only about MNCs or the corporate culture. It is going to the basic needs of Indian society, basically. So what it does, it works along with partner businesses, merchants, and employees. So it will start first with the left-hand side. It will try to sell the software to certain businesses, which has certain employees as well. So it will sell that software, and software will be able to help the companies to track the expenses done by the employees. Now it will also track where the employees are spending it back in the market. So if a card is given to the employee and the card is usable across different merchants, where the employee is going to spend, that behavior they are able to capture from the merchants and try to bring more deals for those customers. So that brings it from the businesses to employees and merchants. That circle or semi-circle is getting completed. So businesses, employees, and where they are spending, getting the deals for those merchants from those merchants to the employees. So employees tempting to spend more, so it will lead to the flexible benefits more basically. And now once we have that behavior available from the employees and the merchants, it is trying to sell the cards or the data with the banking partners that we have a customer, we have the merchants, and I can bring you the financial platform along with it, where the banking partners like all the bigger banks, Kotak, Yes Bank, Axis Bank, SBI are partnering with it. Network partners like Visa and the MasterCard is also partnering, and then the value-added services. I request for other people to go on mute if they're not speaking or they don't have a question. So if you see on the right hand side for the merchants, again they are getting the money by selling the software to those merchants as well, and they are also getting the merchant commission. So they have different sources of income. One is selling the software, second is selling the software to the merchants and businesses separately, and then getting the merchant commission as well. So they have different models to get the money here. And so the different ways where they are able to track and they are trying to project their value addition to the companies is in terms of project-based spender. So you can assign a project and you can define, okay, for this project, this is the spend, this is the categories in which you want to spend. They are putting everything on cloud and trying to go through the numbers, compile it. And then you can get the marketing spends in real time. That is also one of the solutions. They are pitching it to the customers. So on that, they have different examples where they can go to the customer, merchants, businesses, and tells this is the real case scenario, this is the practical scenario where I can help you as a customer or as a software provider or as a bringing a deal to you. So it is, as I said, it is working across cards, and it has a mobile app which will also be giving you the analysis, and it will also be giving the customers how much rewards are available and from where the deals are coming up for those customers basically. And it has a dashboard for reporting and analytics as well. So it is trying to do everything on that front, but the major money or major the KPI which is coming up for this kind of company, if you see, we can divide into three parts. One is the software fees, which is trying to pass it to the MNCs or the bigger companies. Second is the program fees. If the people are trying to associate with their program, that is the another piece. And third is the platform fees. So now if you see here, program fees and the propel fees is, or the revenue coming out of these two verticals, program fees and propel fees is much higher. Software fees is much lesser at this point of time, but it is in a nascent stage. It will keep on growing as the multiple industries will keep coming up and they are able to project them as a SaaS service as well. So program fees, last 1 year, it has grown by almost 89%. That is one of the bigger triggers. So that means it is clearly highlighting the network effect. The more the number of users or the businesses getting associated with it, the more the recurring revenue program will be keep on increasing. Another thing is the number of users on its platform. So you see they are growing by 20% here. 20% growth in the number of users, although it looks good, but I will feel that it is still very less. The company is still not able to break through on getting the right numbers till now, because once the network effect or the flywheel effect is in place, the numbers should shoot up by like 40-50% year on year. So I am feeling that the company is still in a nascent stage and the effect has yet to propagate to its bottom line and the number of users in terms of KPI. It's just in a starting stage where the network effect is starting to get into picture. Okay, another set which is showing is the total number of customers it is getting associated with. So this is a good picture here because the number of businesses basically is 2400 last year, and now in financial year 24 it has went to 3000. So now each businesses would have certain number of employees. So accordingly, you can see the right hand side of the aggregate users will also increase as businesses is increasing on the left hand side. So looks amazing to me on this front because we might be able to catch this company in front stage. Now, what are the strengths of the company? It is number one issuer of the prepaid cards in India. Now, what is prepaid cards? For example, some of you might have seen the Sodexo coupons long back. Company is distributing the Sodexo coupons in a physical format, and you have to give it to the merchant, and you can take certain things from that store. Now, companies have moved from the Sodexo physical coupons to the cards, and the company is telling, okay, I am giving you certain money for lunch or maybe eatable items in form of a prepaid card. This prepaid card has certain tax benefits, so you will not get taxed. And then there is a certain limit for eating out on a certain day. And you can not only use it inside the company, but across outside the company in a restaurant or in a retail store as well. So it is fixed with a loaded money. So you have to spend that much money and then it is over basically. And at the end of a year, whatever money you are not able to use, tax will be deducted and it will be passed to your banking account. So this is the model which MNCs are working right now in India in lot of cities. And the company Zaggle is the number one issuer of such prepaid cards. It is getting associated with different banks, ICICI Access, to have those cards because it cannot keep the money. It has to be associated in certain bank account somewhere. So for that, it has to tie up with this your banking partners, and that's where the network effect is coming from, the banking or the network partners basically. Now, it is a multilingual interface, which is very important because India is a country of multilingual states. All the technology it has developed is in-house. It is not procuring from somebody outside. This is very, very important because it will reduce their expenses or they can customize it very fast. That is very important. All the products are customizable and they are able to customize it based on the needs of the partners to which they are getting associated. So once they develop the software, they put on a cloud on the shelf. Somebody comes with the right need, okay, pick it from the cloud. But if they want to customize it, they will download, do small changes for or customize it for that specific customer and again put it on the cloud. So that means the number of offerings they can put on the cloud is very high. And there would be a time where a new customer comes with a certain requirement and would have a solution on the shelf available for them basically. Customers are available across the sectors. So they have a diversified base. They are not associated with a certain sector itself. So I would say they are sector agnostic. Even one sector goes down, other sector comes up. Their businesses will not be impacted much. It's basically not, it means they are not cyclical in terms of their businesses. Whatever customers get attached to them, it has a low churning rate. Only less than 2% of the customers are not renewing the programs or the platform fees. So they have long-term relationships. And the other one is on the seasoned management, basically. If you see now, I have tried to capture on the leadership part. So their founder is coming from Ford School of Management. If you go to the board of directors, they have the directorships of Root Mobile, Absolute Sports. If I go on the right hand side on the managing director, they have been awarded the inspiring CEO. They have worked with the Citibank. I'm not saying that, okay, getting awarded is, it could be a paid thing in the market. We all know some of the awards are being kind of a paid mechanism. But reaching that stage itself shows some capability. Okay, you have to be first have that capability to reach that stage. Another one is on the even in the independent directors, you can see that the people have been worked. For example, Prerna Tandon has been working as a vice president operations at Infosys. Previously, she was with Genpact. So that means the people, even they are trying to get on the independent director seat, they are also well qualified or have seen the corporate world, what is the exact need for which they can devise the exact solutions. That is really important for the company which is doing some fintech and SaaS collaboration. Even the people who are into the company secretary, or you see the chief financial officer, so they are also have good experience in that domain. So I'm not saying it's the excellent management, but I believe they have the right skills, or they have the right capabilities, and they have the right experience in the corporate world to understand the needs and provide the right solutions. That is what is the key here. That also flowed to some rewards and awards in the recent 2024 itself. Company has been received an award for best spend management. So it's not like this is the only company which is doing it, but it is receiving that award. So best spend management plus best cards initiative for another card which is called as ZX. Another award, FinTech Brand of the Year. Third award, Pride of Telangana Startup category. Another award is Excellence in Innovation in the Business Spend Management. So these are the all recent awards. That means the space is evolving, and this company is in the forefront of that evolving space. Coming to fundamental ratios, this company is around 3,618 market crore cap, and the price last week was around 295. It is still at 302 only. Sales, you see, last 4 years, the sales have propagated from 68 to 776, almost 11x sales growth in 4 years. Profit, again, profit has also grown by 11x in 4 years. Amazing numbers. OPM is low, net profit margin is low, but it is top line is growing like amazing, and everything is flowing back to the bottom line. That is the key here. Pledging is zero, pledge by promoter is zero, debt is almost nil, ROC and ROE number are fantastic, close to 15%. One thing that you can worry about is the stock P, which is 82. That is what is possibly causing the stock to hold on to this price and not moving forward. And I think sooner or later, this growth will propagate further in terms of sale in the coming years, and the PE will come down. Coming to the stake of promoters, they have a good skin in the game. I would not say best in class, but 44%. FIIs have 11%, DIs have 4.575%. Ashish Kacholia recently entered last 2-3 quarters, and it is continuously increasing stakes. You see that in September 23, he has a stake of 1.74%, and it has grown to 2.37%. Bengal Finance, again the company of Ashish domain. So Ashish has a total almost more than 4% stake in the company itself. So overall, public share is almost, you can say 12 to 14, 15, almost 25%, not more actually. All the bigger shares has been taken away by bigger players of FIIs, DIs, and the HNI investors basically here. Now coming to the trends part, or the triggers basically. So one bigger trend. I'm a investor who thinks in terms of what is the bigger picture first. Bigger picture is country is moving towards digital payments and with the increasing scope of prepaid cards. Third metric which I have is new companies are getting established in India, and that is clearly reflected by uh, some of the numbers which has been taken from some of the sources, and they are also part of initial DHRP of the company, this company as well as of some other companies as well. So I have taken this data from DHRP and the resources which I mentioned here. So some of thing is coming from RBI and some is coming from different uh, fintech market analysis. So if you see the card transactions are increasing, but where we are focusing more on, if you see the prepaid cards. So prepaid card is increasing last 3-4 years continuously. It has a dip in 2021 when the people are not going out in the COVID. But even previous to that, you can see the numbers are growing exponentially from 2018 to 20. So again, we are reaching a stage where this number will grow fast. Transaction value by the card type, again, prepaid is increasing very much along with credit card. Debit cards are not increasing. So only two segments which are growing is credit card and prepaid card. Okay, so this is on the last 6 years. Fintech market. Fintech market is projected to grow very fast. So we are in 2024 almost at 4626. Within 3 to 4 years, this market will get doubled. So this market itself is growing by like 18 to 20% year on year. So that means the companies which are into that domain and they are doing a good progress, they should be growing at 30% CAGR. Because this is the average of the whole market. Some companies will grow at 10% and some companies will grow at 30%. So overall market is growing by 20%. Fintech transaction volume is also expected to double in next 4 years. So that is also growing at a good pace. Digital payments revenue, and if you see the new company registration. So now new company registration, if I see from 2021 to 2023 or 24, it is almost growing at a rate of 27% every year. That means every year 27% more companies are getting registered in India. That means lot of business scope for companies like Zaggle Prepaid. Okay, so prepaid growth, cards growth till 2027 expected to be in the range of 30 to 40% CAGR. So I feel we are still at a very infant stage. We have not cracked the market, but scope is really high. Now, what management is saying? So Macro Trends is showing that okay, we are increasing in the digital payments. We are trying to have the bigger scope of prepaid cards. But what management is thinking? Management is guiding us to double their revenue over the next 2 years. They have done it in last 3 years, and now they want to increase faster, grow faster, and they want to double in next 2 years through organic growth. So that means their revenue expectations are in the tune of 45 to 55%. Apart from that, they also want to do inorganic. So that means the revenue growth could be more than 45% if they execute it well. Plus, they want to expand geographically into the US markets where the margins would be a little bit higher for them. So if they are able to do it, we are getting a company which can grow by 50 to 60% CAGR growth. And we have seen in the past, almost everything has flown to the bottom line. So even the EPS growth could be around 50 to 60%. And if I get such a company somewhere around 40 to 50 PE levels, or maybe a little bit lesser, or even at 50 to 60 PE levels, we are hitting a PEG ratio of almost 1. And it will keep on growing. So that means PEG ratio will almost remain 1 and the company will keep on growing year on year with that. So that means the company has a chance of little bit going back in terms of a stock price before earnings catch up. So there could be a stagnant time in between. So that's what I think the charts will show us when we go to the chart part. New vertical is they're trying to introduce corporate credit cards as well, because the two segments which we have seen in the above analysis or the graph is only two segments which are growing. One is prepaid cards, second is credit cards. So they are trying to introduce corporate credit cards itself. So they have done it in 2024 and the monthly volume is already started to exceed the monthly volume for prepaid card. So it is expected actually. It's not a big deal because prepaid card is limited by certain numbers like 2,000, 3,000, while the credit card limit could be 20,000 to 30,000. So the monthly volume is expected to grow, and I think they have taken the right step in terms of the transactions. So if certain percentage is associated or flowing back to them as a fees, I think they will start reporting more revenue out of it. Another thing which they have done recently is JetX platform, and it has been offered by the banks as a bundled solution of corporate credit cards plus software as a service. So this is where they are trying to focus more on JetX. New contracts in last 1 year, you can see that the number of contracts they have done with the big companies. So this all information I have got from the press releases only. So they have tied up with Hero MotoCorp, Lifestyle, Quest Corp, Benetton Column, Wipro, Mcure, Axis Bank, Expelio, Yokohama, and Subway. So diversified customers, and these associations keep on flowing. So this is coming from the last 8 to 10 months. So almost every month they are getting new customers on board, which are renowned, which are big, which are well known in India itself. One major contract which they have won with Torrent Gas for 2 years, where they could have an opportunity of 200 crore business for implementing the closed loop feed program. This is exactly the example which I was talking about when a truck moves from one part of India to another and it is relying on gas refill or petrol refill. So the company has given those cards to such companies like Torrent Gas, and they have passed it to their drivers, and they are trying to track how the drivers are utilizing that money in terms of prepaid cards. Agreements with ecosystem players. So they are also trying to move towards the forex cards, travel cards, and the cross-border payments. For that, they have done association with Visa, some of the other companies like Skydo Technologies for cross-border payments, and Axis Bank. Apart from that, travel cards, they are trying to be associated with Ease My Trip, and another agent is Ria Travel, which is small as of now. But for forex and travel, they are getting associated with these companies. Strategic alliances and partnerships with PSU. So they are also trying to get PSUs on board with them. So PNB, Canara Bank, and Indian Bank, they have associated, and every association I am reading continuously. Most of the time, it is for longer term. There is no company which I have felt has been associated with them for 3 months or 6 months. It's a big step for a company. So that means even if the competitor comes, it's not easy to get these customers back because they are associated or tied up with Zaggle for 2 to 3 years. So not easy to take away the territory of Zaggle. So once the network effect is in place, it's not easy for new competitor to come in despite the profit margins are lower. So that means that territory is protected basically for such kind of companies. Opportunity size wise, Propel program itself can hit potentially 3,000 crore in revenue. And overall revenue that the management also feels, and I also feels the size is so big in the industry is we can go 6x in revenue size. So almost from 750 crores to 5,000 crore by 2030. Net profit margin, I would expect to little bit come down and it should remain between 4 to 7%. So assuming that we should have a profits of roughly in the range of 250 to 350 crores. And with an EPS of 19 to 25 and a PE of 40 to 60 based on companies growing by 40 to 50% CAGR, I am expecting the price should hit somewhere between 750 to 1500 in a bigger range. And if I get such a business in the panic fall, around 150 or 100 or 200, I would be lapping it up like in terms of truckload. I have certain position which is as per my general allocation. But if I want to get a truckload, I would be looking at somewhere between 100, 150, 200 in a panic spot. I would not be missing this kind of a company. That's how much bullish I am. What are the peers? I again went to the DHRP and you can see number of peers basically. So Jaggle, Devi, Brex, Clio, Ramp, and HEPA. So in India, origin headquarters is only two companies, the first and the last column, and you see the amount of features given by those companies. Jaggle has been having lot of features for their loyalty cards. HEPA, which is India-based, is not even able to match Jaggle. So there is a competition. There are apps, there are softwares available, but Jaggle is doing good in that. Even in spend management, you can see there are a lot of features which are required by the customers or the companies, and Zaggle is able to meet a lot of them. Here, Happy is able to um, directly challenge Jaggle with lot of features. So here, Happy has been challenging. Another one which is coming very close is Expensify, which is the fourth last column basically. That is also very, very close in terms of spend management. So there are three major companies I would say which are into spend management. But Zaggle has lot of features here also. If I go to the competitor features in terms of loans, basically kind of it is going into non-banking financial company features, basically fintech solutions. Here, I think Jaggle is taking a lead, and the major competitor is Coupa. On the other front of expense and procure management in different categories like travel invoice analytics, here again we have Zaggle satisfying all the categories. So pretty much they have a comprehensive suite of products, as we have mentioned in the key investment thesis. We have good number of customers to back it up, and the network effect has started taking place. Technicals. So the chart I have taken on 6th July, and my entry, if you see, is the first point here itself. Around that point, I have tried to take an entry some months back, basically, and it went up to almost 400. It has started coming down. But if you see the last few weeks, it is trying to do a VCP kind of a pattern, and you see the volumes on the downside every time it tries to make a up move. Recently, also last 2 days, it is trying to hit around 310, 314 mark. And I believe once it is able to cross this VCP trend line breakout and hits above 314, bigger numbers come in play for this chart basically. So the chart is bullish. You see all the panic falls between last 6 months or 4 months. It is able to absorb. It is trading in a range, and if you get somewhere around 260 something, it would be good for you. But I don't think it will be going there basically in the shortest time frame. So technical wise, still we are looking for a good breakout above 315. Risk wise, operating cash flows are not good as expected. The company is still growing and it needs to be monitored very closely. Working capital days and cash conversion cycle is expanding. Ideally, cash conversion cycle should be declining. So company should have a full control. But I believe the company is expanding right now and they're trying to get more customers on board and they're trying to expand their services as well. So it is an expansion phase. So this is expanding. We need to keep track. Business is heavily tilted towards H2 of financial year. So that means second half of financial year is more revenue heavy. Other income, currently it is coming from the IPO cash, whatever they have got and putting in FD and the other resources, that will go down once the cash is utilized. So we have to check specifically on the actual revenue which is flowing, not on the other income. Lot of investment they have done for this product, Jetix, which is an analytics platform, spend management platform. If it doesn't take off, a good amount will be written off from the assets, basically. Here, the challenge is if it starts taking off, you could see the margin improvement also. So it's kind of a hanging situation right now. Companies are banking a lot of money on Jetix, and if it is not successful, we could be in a painful period because valuation wise, it is pretty much high at this point of time. From time to time, another challenge which will keep coming up for the fintech companies is regulatory compliance. So here and there, they will keep on firing, okay, this rule, that rule, and this company might be hit with those kind of rules and the growth might stagnate. High valuations part, I have already discussed. So this is a risk in the short-term time frame, although the runway seems very, very long for this company growth. So to summarize, my key investment thesis again is the company is in a nascent stage, and looking at the picture of fintech market as well as the new companies registration data, usage of prepaid cards, I see the scope is much high. We need to believe on the company's management to do the right execution. And that's where I try to capture whether the company management is coming from the right place or not. So here you can see that they have the capabilities. They have seen the corporate world. They understand the problems. They understand the solutions for it. So basically, we have to just to hold and wait for the execution to take place there. So that summarizes my key investment thesis for this company. I am open to question and answers. Yeah, guys.
Puneet Amar here.
Yes, Amar.
Yeah. So we have seen that Zaggle is like big on prepaid cards, right? Are they also
Yeah.
boarding the bandwagon on the UPI cards? It's prepaid cards
No.
only, but backed up with the UPI engine. Because
No,
that is
they're
where
not
probably,
yeah, but the UPI, the money is not there basically. The money amount is very small. Although the transaction volume is very high, but the money which is flowing back from UPI is very, very low. So I've not seen them getting into UPI as of now. They are banking more on credit cards
okay.
as a fintech company.
Hey Puneet, Mithun here.
Yeah.
Sodexo is actually a competitor to Zaggle, right? So why, why it is not being referred over here? And most of the corporate clients use Sodexo, which is now Flexi. So
So
any
it's not only about the card, giving the card. It's about combination of that card and the platform dashboard analysis along with that software. This is what Jaggle is trying to bring in basically. So it's not just giving that card and spend it. They are trying to give back all the data back to the customers, utilizing that data with the merchants to bring that deal back. So this is where the software part is coming into picture from Zaggle. So prepaid cards along with the software. So that's where the fintech plus SaaS. So I feel they are in the right space that way.
Yeah, I agree, Puneet. That 360-degree view, which is being provided to all the stakeholders, be it the company owner or the employees or other players within the loop, that is very valuable.
Yeah, hi Puneet, Yogesh this side. Couple of queries. One, what is their association and dependency on Visa? Because Visa has, not so good, kind of rapport with other software listed company, though it's recovering now very well. But
Yeah.
what's their dependency on Visa?
So they are trying to associate it for the forex and other things as well. I feel with the Visa. Here I have captured it specifically on the Visa part. Yeah. So for the forex specifically, they are trying to get that collaboration. So this
Okay.
is one place where forex is basically very, very regulatory compliant thing, and you have to have the right partners for it. I think they have tied up for, they have chosen Visa for that part specifically.
Okay. So nothing for any domestic related things, right? If it's Forex only.
Yeah,
Yeah.
correct.
Okay. And second, on that spends management, we have, likes of, Coupa or, we have SAP Concur and everything like that. So wouldn't it be, challenge for them, as you mentioned, that they will try to expand in Europe? Of course, Aon is also there, which is into the same category for benefit management, insurance managements for employees and all this. I know there are, certain
Definitely a
short.
challenge.
It will be a challenge, right?
Yes, yes. I understand your question. Definitely a challenge because the field or they are into a very competitive industry, and that's where it's reflected in the net profit margins are very, very low. But what I'm banking upon is they will expand their top line itself when they're venturing into, and coming from an Indian segment, their cost would be low basically.
Yes.
So when they're trying to compete with bigger players outside India, their cost is low, and they have a software as a product, so which they have built in-house. So they are trying to manage their cost there itself, and overall net profit margin is low, but I hope they will be able to sustain even with that competition when they're expanding in US or Europe. Not denying on the competition part, but I see if they are able to grow 11x in last 4 years in India, why not they cannot do it outside India also? Because even in India, they have this small competition. It's not like 100% market is grabbed by Zaggle. It is almost 16 to 20% what they're trying to grab. So that means 80% competition is still there in India. Still, they are able to grow 11x. So I feel the pool is so big and the pool is growing. That's where I'm banking upon.
Right. Just to add 2 cents, if they overcome, some see, SAP has its own, integration issues with other tools. If I need to extract some, reporting from SAP invoices or, expense management or do any duplication checks, it is, like very cumbersome task. if they are able to
Yeah.
cater to this, then they will have, freeway for growth, for
I
integration.
think they have tried to figure out that solution. That's where a lot of industries are coming back to them.
Got it.
So yeah, I will share this PPT basically. I will put it in a PDF format and share with all of you. And please go through and ask me questions back. I'm available on chat in WhatsApp, even on Twitter. I'm reachable basically in different social media platforms. So I will stop it here and then I will hand it over to the next participant, Amar.
Thank you, Puneet, for this
Mithun,
wonderful,
Amar or
insightful content.
yeah. So Mithun, I think you will be presenting, right? If I just go back to the
Yeah.
schedule. Yeah. Okay. So we'll take it from there, guys. From Mithun. Let me just check on the hosting part of it. Share screen is visible to you. Yeah, now you should be able to host.
Let me know once you're able to see my screen.
Yeah, we are able to see.
Okay. So, firstly, I would say that this is a very basic presentation, no PPTs or something like that. It would be including more of conf call details. I would love to add more details, but due to time constraint, I was not able to add more details for this company. So the company which I'm going to talk about is Axiscades, and basically I'm going to talk about what would work for Axiscades this year and why it did not work for last year, basically. So basically, Axiscades is a technology company. It's not a plain vanilla IT company like TCS. It's more like LTTS, but it's a very smaller company. And here we have a market cap of 2,400 crores, and the PE multiple looks expensive because it's coming from a very low profit comparatively uh, because of some reasons which I will discuss in further. And these are book values is 140, ROE is 7 point. So basically it looks expensive prima facie over here. And this is the technical chart, which is a weekly chart with a relative strength, where it had a run from 100 rupees to 800, 900, something 850, something like that. And then it started falling again because last year results were not so great. Predominantly, it was not great because of some reasons which will be justified later. So Axiscades, being even though a small company, it has presence in all the verticals, whichever you can think of as a bigger company would be in. More like a Tata Electronics, more like LTTS, or some other niche companies also. There are some verticals which are exactly a niche for some other companies, like it's into aerospace, defense, heavy energy, heavy engineering, energy, automotive, medical and healthcare. The heavy energy and medical and healthcare is not grown in such a way, while the aerospace and defense, and they are focusing on the energy predominantly. Also, they have a good system in place where they are trying to reach clients for their ADAS system, which is automated driver assistance system, which predominantly is being done by KPIT, which is known for far in a bigger scale. So what happened, what happened recently with regards to Axiscades, was there has been completely a change in the management. Also, there is a change in the promoter, which will not be reflected screener if at all you just do not expand it. If at all it's collapsed, then you will see that the promoter percentage here and there has always been the same, but in reality, it has changed drastically. So first of all, we need to look into the management. The management consists of Arun Krishnamurthy and Shashidhar and Jaya Krishnan and the rest of the other guys. But Arun and Shashidhar are the guys who have joined recently. They are around 2.5 years old with this company. But they have a very good background because they come from Tata Technologies for Arun, and Shashidhar from, he is also Tata, but he was not exactly to Tata Technologies, he was into Tata Industries, I suppose. But they worked with each other. At the same time, they recently hired, as in, not they hired, the company hired a chairperson who was initially working with the CEO as a chairperson over there, and he joined as okay, I missed that part or what? Okay. Oh, I missed that part. So I remember, I do not recollect his name, but I will show it to you. That that particular chap worked with the Wipro as a chairperson over there for good number of, yeah. So a big
Neemachwala.
colleague, Nemu Chava. Yeah. So he's a person who was with Wipro, and then he joined as old as like 6 months back. So these are the completely new faces who have joined Axiscades, and what happened after that. And these are their experiences based on the LinkedIn profile, where he worked with Tata Technologies, and he worked predominantly into ADAS system only. And Shashidhar was also into Tata Advanced Materials. He was more into aerospace, space, defense, these kind of experience. The latest induction was Mr. As in Dr. S. Christopher. Uh, as in, we got a reference that DRDO does not pay well. In that case, the reality is, yes, the salaries are not so great in DRDO. So many of the DRDO scientists, the good scientists or the chairpersons over there, when they leave DRDO, they join uh, companies, the private companies. And we were fortunate to have Dr. Christopher, who also joined recently, as recent as like 6 months back. And these are his details. So things looks now good so far. So now what happened in this quarter only? Let's see. So the engineering space grew by 21%. The revenue from new logos, as in new clients, grew 5 times. Aerospace OEM business becomes 18 million in terms of contract value they are looking for. Defense, which they acquired Mistral for 39 crores of revenue, went to 112 crores. And then they have another 272 crores in executable production orders. I will discuss more about the production orders and non-production orders, which is more like a designing orders in details. Okay. And these are the more highlights of the Q4. So what vision they have, as in what Axiscades want to do, is they wanted to increase their sales to 200 millions, which is around 1600 crores. That is where their target is. Currently, their sales is 952 crores. Okay. And currently their PPT is 53 crores. And they have a vision to grow it to 160 to 180 crores, which includes the inorganic part also. That is what, but the inorganic part won't be more than 30 million. That's what the expectations is by Arun Krishnamurthy. So, and they talked about aggressive hiring also. So increase the employee strength from 3,000 to 4,000 in next 2 years. This is the old vision which was given in FY23's investor presentation, where they have highlighted that vision in FY23 for FY26, mentioning that these are the status. They wanted to increase their revenue, they wanted to increase the PAT by 3x, and they wanted to be debt free. They had massive debts, because they have to acquire a company called Mistral, which was not there, of course. And for getting in that company, they have to, as in they have to overpay over there. At the same time, it being such a small company, they were charged very higher interest rate, as in very expensive interest rate. So when they, and due to this COVID thing, all other things, this acquisition took time. As a result, there was a penalty added by the Mistral management to Axiscades, and which results into losses, as in the exceptional losses which happened in FY23, which was reflected over here, F minus 236. As a result, so net profit, they got it reduced to minus 102 crores. That is what happened. And then once they have completed the acquisition, they moved their bank from one bank to another bank, and then they got the reduced interest rate. But of course, again, the bank who is leaving this Axiscades deal charged them penalty, which they paid, and now they are getting around 10%, 9 to 10%. That's what I recollect in their con call, and this is their latest financial details in terms of revenue, where they are 116, which they wanted to reach to FY26 as 200, and within that 200, 30 would be inorganic, while the rest of the things are will be organic. So let's say from 160, they should grow to 170 within a span of 2 years, which is also going to be a very high, good growth rate. Though And these are the details where they are talking about the other revenues in terms of INR. These are the INR details. This is the US details, as in the $1 million. So employee stats, so how are they working on what they have mentioned in FY23, basically? So they showed that they have recently hired, they went from FY23 2,600 to 3,100 employees. They are hiring more aggressively. If at all you look into the LinkedIn website, which will go through, that they have been posting their current number of vacancies which they have in multiple verticals on a daily basis. Sorry, on a monthly basis. So, and let's speak about the promoter. Who's the promoter of this company? The company is owned by Jupiter Capital, which is a family office of Rajiv Chandrasekhar. Right now, he's no more a minister of electronics and information technology, but he was a minister, and his LinkedIn profile is got updated. But I had previous screenshots. That's the reason I just wanted to highlight that. This chap had already made good money. He's the guy who made BPL, basically. He sold BPL to Hutch and then made good money, and then he started his own businesses, and that's how he started making a family offices called Jupiter Capital. It has no link to any other Jupiter companies. So this is predominantly Jupiter Capital is the only family office which Rajiv Chandrasekhar handles. And what happened over here, the old promoters which were part of Axiscades, he has acquired, as in the Jupiter Capital has acquired their stakes in FY 2014, 2014 or 2014-15. That's where the changes happened, as in this promoter came in and took over the stake of the existing promoters, and then he started looking into the expanding this company very well, and that's the reason it got moved in 2018. It started moving, basically. Otherwise, it was not so functional company as such. So what are their capabilities in different verticals? So currently, defense production is 30 crores, which is expected to reach 100 crores. And by FY26, it should be 200 crores. That is what he spoke to Neeraj Shah in Bloomberg interview. So they will continue to do R&D, which is slightly lower margin, but it waves to the production, and these are their technologies which they are developing. So they are predominantly in radar system, and within this radar, they are trying to develop these anti-drone facilities for the defense company, and they are very vocal that whatever drones or anti-drones they're gonna make, they are gonna stick with defense. They are not gonna venture into logistics or any other places for drones and anti-drones. In case of automotive, these are their capabilities, where they talk about the ADAS as one of the feature, and the rest of the things like digital manufacturing, prototyping, tool design, CNC programming, fixtures, all the designing parts, basically, more or less, can be done by Axiscades, where they are building up more scale because they have recently acquired another company in Germany who is into this automotive space. So Germany being a space where all the auto cars makes their base, as in there's like a mecca of cars. Then we are talking about the aerospace. So this is their capabilities, and due to this capabilities, they have Airbus as their client, and they are vocal about this Airbus as a client, where they talked about the incremental revenue coming from aerospace is very high to them, is as high as 40%. That's what their expectations are going to be coming days. So right now it's around 33%, but it's going to go to 43%. And they expect this Airbus as a client to grow multifold, and hence this vertical will also grow multifold. So these are the another attachments which I've attached is the conf call details on aerospace. Last year their growth has been 44% and they're gaining more share. Okay, and they are working for getting more wallet share using Mistral as their potential as in terms of potential base, because Mistral has the capability of all this radar technologies. On a defense part, so this is on they spoke about our products and solutions businesses with the defense will be growing over 50%, and that's what being highlighted. It will go to 100 and then go to 200 crores. We have extremely strong relationships with the labs like DRDO, precisely because of S. Christopher, and these are another institutions, and they have association with BAIL and HL, where they have recently released an article also as in that they have got some deal with BAIL about some radars. Then on automotive space, so I would say from a hunting perspective, we have added 3 and 4 prominent logos. This area is where they're predominantly looking into the ADAS and AUTOSAR bootloader software. So they are getting into the bigger clients also. I don't have the names of the clients for the auto sector, this automotive space, but in case of if at all I get those logos name, then I will surely forward it in the next messages. Okay. On the defense part, well, what happens in case of defense? So, he explained his defense very beautifully over here. What happens in defense, whichever product is being coming out, it takes time, and the time gets like 4 to 5 years. And within that, it takes like 2 to 3 years. They get into designing part where the margins sometimes are more, but the volume is very less. But when it get productionized, that time the margin might be little lesser, but the volume is so big that it covers up the margin as well as makes more money out of it. So last few years has been the year of R&D space, where they have been spending money, where they were not able to recover that kind of money which they were expecting. But now they are getting productionized. That is the space where they got the project from Indian Army about this anti-drone facilities, where they are gonna they have already delivered, I suppose, 40 or 44 this portable anti-drone facilities, which you can carry from one place to another place. And these anti-drones are not anti-drones which is been made by anyone else like Zen Technologies or any other company, because they have a special infrared which will jam. Of course, at the same time they have another infrared communication where they can speak with their own drone. Rather than blocking that drone, they can block any other drones, basically any other whichever drones which they don't want it to. So that is kind of technology which they have built, and they have mentioned that it is not being built by anybody else, not even Zen Technologies. So this is the explanation where they have in FY23 we did lots of projects which are in the R&D space, but it is important that because you do that and product is certified, then in the next 5-10 years when the production kicks in, the reason the margin are 10% is because the fact that we have more R&D projects as compared to the production projects. If you look at our competitors, I don't wanted to name them, but if you go back 2-3 years, you will see they were in the R&D phase, which is predominantly Zen Technologies, and they were in the lower EBITDA. But now the production has kicked out for them. They are seeing better EBITDA. You will see the same playing out for us in next few years, which is this. I'm not mentioned the year, but this was in FY23 conf call. And we expect that this year, in the H2 of this year, where multiple projects are gonna be in productionized phase, and they will have a very bump up margin in EBITDA as well as the bump up higher sales. And that's the reason he's talking about almost like 170 millions from 200 millions coming out from this sales. And again, he specified on Q4 FY24 that the system, what I spoke about anti-drone, is the anti-drone that we have inducted into our armed force is currently being used. The system being small portable battery comes operated, caters to multiple frequency spectrum, including command and control and navigation, and can detect and jam varieties of drones, completely made in India. It performs both electronic spectrum monitoring and electronic countermeasures, functional up to 5 kilometers. It covers also covers special frequency address, not spectrum not addressed by any other system in the market. The Indian Ministry of Defense plans to acquire counter anti-UAF capabilities, including that this is man portable anti-drone, something like that. I don't remember the full forms. Through multiple of RFPs. These addressable opportunity in the area within the India is about 3,000 crores in next 5 years, not to speak of the potential of exports. This is what he spoke about, this anti-drone facility which they have developed and which is not available to any other player in India, at least as of now. So this is again, he validated the confirmation that we are aiming to between 160 to 180 crores of PAT, which I think it should be PBT, not PAT, but and they are aiming for FY26. That is where it is, and they are into semiconductor space also, which they did not talk much until latest con call, and where they do validation of this semiconductor chips. But this place is not growing as they are expecting because not of the opportunity, because not availability of the talent. They are not getting the talent which they can hire and he can work on these opportunities, because it does not require employee of 6 months of 8 months of training. Sometimes the training takes in years, and you don't get those specialized employees as a talent in India. So if you get it, and they are basically hired by some other companies who are basically foreign based, especially GCC based, and they are taking up lots of employees like that. So that's the reason they are not able to grow in the semiconductor space, but they are hopeful that it will grow once they are able to develop that kind of skill set within the existing employees. And this is the small video which I have attached, which shows the one second, which shows the LinkedIn website of Axiscades, which shows the hiring which they are doing right now. This is the video which I have taken today only. Yeah. So most of the details I have added yesterday and today. So that's the reason I'm not able to have that kind of details. But I know this company because I've been tracking for last 1.5 years. So just I wanted to share the Axiscades LinkedIn portal. You can see the things also apart from the hiring. So this is what they are doing in aerospace hiring in Bengaluru. Then they are again hiring for automotive electronics. These are the latest, as in these are not like old. These are like 1 month, 2 month old. This is again automotive. This is smart, something else. Then oil and gas. So basically the idea is that they are hiring a lot and they wanted to expand, and that is where the management is in place now. Good skill set employees are there, and that's and in the as in the defense vertical will also get productionized, and we expect a jump up in coming years. This is a basic thesis, and that's it. As in any questions you have, you can ask me right now, and I will try to answer it. If at all I don't have an answer, I will come back to you, maybe today or maybe tomorrow. This is what I was talking about, that they have got into bail about developing a radar system. This moment contracts design and development supply of one of the first liquid cooled radar processing system in the country. This is what they have got. This is 1 month old, and this is because of the Mistral Solutions, which is part of Axiscades. Any questions? Let me know. I wanted to talk about another stock also, but I don't wanted to go into deep, but I will just take few minutes. So if we can just complete Axiscades, then we can move towards the next stock.
Yeah, Mithun, I think one of the critical points that you have highlighted is it's just a comment from my side, not a question. And to make the audience aware also that currently the margins are lower because they are in R&D phase, and slowly it will go up once the product is monetized.
Yes.
And that is the key thesis for Axiscades, why it is not moving, why the things are not working out in terms of the bottom line or the cash flows at this point of time, and why it can work in the coming years. I think that is the critical point that you should look while researching this company.
Yes, I will cover that part where basically the margins are low because they are more into R&D fees, and they have been acquiring companies one after another. As in, they have acquired last after Mistral. I thought there would be hardly any companies left out because they are going for big acquisitions. So they acquired one company in Germany, and that impacts their cash flow. And then they again hired Epcogen, I suppose. Epcogen, another company in India, who does. Who provides infrastructure facilities, EPC businesses to Gulf countries, predominantly into oil and gas. So that stretches them as in the bulk, and they are trying to go out in all the verticals. So these Axiscades is not very niche specifically dependent on one vertical only, like Zen in case of defense, and KPIT in case of ADAS facilities, or energy specific. They are not into only in energy. They are trying to go all in all the verticals and try to grow each vertical. But I suppose the best vertical which they are growing is the aerospace right now. The second is the defense. The third they talked about, as in the last con call, as far as I remember, that they got a new client, a new logo, who is the largest and the biggest manufacturer of mobile and the electronic goods. So basically that's Samsung, but they did not name it. But they got Samsung also. My assumption is Samsung, because based on the adjectives which they have given towards the company. So that should also do good.
Yeah, I think Vineet has a question. Vineet, go ahead.
Hi Puneet, I'm Mithun.
Hi.
So on the heavy engineering division part, where they have mentioned there is a slump in this technology services and solutions part. And also, how do you see Krishnamurthy, like he has there is a AGM that has been uploaded on YouTube FY23 one, where he said defense production was starting there then and there itself in FY24. But how do you see the management walking the talk on this? Because that revenue has still not kicked in, and yet they're even acquiring new logos, Epcogen, for example. I know for a fact that Mistral has been doing well, the platform part, but like the defense production, even Q3, he mentioned there is some slump again. So how do you see them walking the talk on this?
So they are not able to deliver on heavy engineering part. That is for sure. As in that part is
No, not just heavy engineering, even the defense one.
no, defense they have
if you
grown.
see,
As in they have grown 3x over there. So they have grown from
not
39 from Mistral for 39 to 100. That is what they have done, and they will.
no, not Mistral. Just the strategic. I mean, the technology services part that they mentioned. In that defense, it includes defense, not the strategic solutions part. So within that, they were unable to they were. I mean, they kept commenting that there will be high growth due to production ramp up from now. This was the talk last year actually, and then still Q3 again was a they lost some revenue over there, and again this has been repeated in Q4 as well. So do you see that kicking in from this year at least?
This year it should kicking. In fact, let me. As in, I will come back. I will share the presentation as well as the link where they talked about the organic growth as well as the inorganic growth because of Epcogen. But that space is moving very slow because of the global factors. That's what they have said.
Yeah. I just want to know if they keep diluting and adding new labels without the defense production part that that are still not kicked in.
Mhm.
There has also been some dilution of rights issue at 636 or something.
Yes, because they
So
got-
this will, in essence, destroy the shareholder value, right? So if they still don't deliver growth and keep doing this inorganic thing.
so that part basically the dilution did not happen because the promoter sold stake and the
No, I know. It's a
yeah.
preferential or rights issue. Yeah.
So that did not diluted the existing retail shareholder. That is what I am also concerned about. That the kind of acquisition they are doing and the kind of stretch they do there in balance sheet can have negative impact. That's what Mistral went wrong, as in very badly. If at all Mistral could have been done in a better way in the initial years only, we would have got Axiscades flying like high, like what happened with Zentech, which was not the case. So I was really concerned when they acquired Epcogen, as in, but I understand that they don't have capabilities in heavy engineering, and that's the reason they went into Epcogen, something like that. And that's the only thing which I can see right now. But I don't have big hopes from heavy engineering. I have a very big hopes from Airbus, as in aerospace and defense. And that's the place where they expect very good run in this year. Heavy engineering, as in, it's not going anywhere, as in. Apart from India, heavy engineering in global verticals are not growing, as in you track any other company like Maltech Technologies also, who is a ancillary in heavy engineering in US, they are also not doing well. So you can get multiple factors, as you can link multiple companies and see that globally it's not working out. Any other questions?
No, nothing apart from that. I mean, I have been seeing them like they are poaching talent from the like all the top ER&D
They are
players
in this
like
space,
for the
yes, yes.
last two years, I think. But
Yes,
still, my only concern is if they are expanding this big and if if the revenue exponential growth doesn't still kick in,
it does not
that
happen. It's
that
time.
won't be margin accretive and will be destructive in a sense, right? We have
Yeah.
seen so many times. Yeah,
Yeah.
that was the
So
only
Mistral
concern. Yeah.
acquisition also, in terms of retaining the talent of Mistral, they have to do ESOPs over there, and they have to
Correct.
pay well over there. Without
Yeah.
then they this chap from Mistral's the CEO got under Axiscades. Now he's a chief delivery officer within Axiscades. So he did not left the company, but he's now well paid, as and that's the reason he's sticking with Axiscades. Otherwise, he would have left Axiscades and went to any other company, and a bigger company like LT. Larsen Tobro is also hiring big time. So as in, it will take time, and that's my thesis is that this time has come now, as in that's what the con call indicated, the last con call. And I'm gonna watch Q1 and Q2. I have a position, as in I'm completely biased towards it, but I had a position in Zentech. I have a position in Axiscades. If Axiscades start performing, then I will sell Zentech and venture out in Axiscades because of the lack of capital. Because I expect exponential growth, the similar as in Zentech ran in front of me. So I expect the Axiscades to run similar pattern in coming years, as in not coming years, in coming months. As in once Q2 and Q3 results shows, then that should do wonders to Axiscades, because the P will contract and the growth.
Correct. I mean, PAT will go from 30-40 crores somewhere to 180, sort of 160, 170 crores.
Yes.
Yeah. I get it.
Yeah.
Thanks a lot, Mithun. Yeah, that helps.
Hi guys, any other question for Mithun?
Mithun, not
Normal.
related to this Axiscades. So you mentioned that Jupiter promoter
Capital.
Rajiv Chandrasekhar is in there. He's still in there, right? And he was owning that BPL, that printed circuit board company, right? Or is it any else?
No, BPL. When I say BPL, it was like you remember Hutch?
Okay, yeah, Hutch. It's a telecom provider, right?
Telecom, basically like what we have. It has been taken over by Vodafone. So
Yes.
prior to that, it was Orange and BPL basically at that time, and they were sold to Hutch. And then Hutch got sold to Vodafone.
Vodafone.
Yeah. So Orange and BPL were in. He was in.
Okay.
He was in linkage with that particular firm, and that's how he created big capital over there.
Right. Hutchison went to no.
So I look into promoters and management much more than the company, and then automatically it works. As in most of the times, it works for me. If the promoter and the management are shabby and they leave the firms faster, then it does not create the wealth. As in, I've been watching this with multiple companies. So, and they have capital now. As in, they have enormous capital.
Right. Thank.
Also, to add, BPL was the same thing which used to manufacture TVs in the past. So he passed out as an electronics engineer. He came
Yes.
from US and started this. Yeah.
Yes.
Okay, that BPL TV, right?
Yes.
Yes. Okay, I was getting confused that one we have BPL which is listed. It is into printed circuit manufacturing.
No, not that one. Not that one.
Okay.
Okay, Mithun, you want to talk about something else also? So you have 10 minutes.
Yeah, it will not take much. As in, it's a basic. Already we covered that. As in, so let me close this. So I wanted to talk about Swan, which was already talked by Shekhar. Initially, I wanted to take this stock as a main, but later I backed out because it moved multiple circuits, and I was scared that when I'm going to speak, it will be at circuit of 800, 900, or maybe 1000. The way it started moving. So Swan Energy, I'm just going to start. I'm just going to give you a gist of Swan Energy, what has happened, and I won't go deal with numbers the way I dealt with Axiscades. I'm just going to talk about the management. So this management is Swan Energy is completely family owned. Mr. Nikhil Merchant is a son-in-law of Navin Bhai Sidave. He is the brother of Nikhil. Vivek and Bhavik are both our sons, and she's the daughter of Nikhil, basically. So this is all is completely family driven. Okay. Initially, Swan was more into textiles, and it was a big player in textiles, but later on they scrapped out and they ventured into some other businesses, which they realized that it is not working well, so they came back into textiles. But the textile business which they had in Mumbai, or another places, they closed that because the real estate exposure kicked in over there, and they started making construction over there, as in the real estate. And that's the reason you won't see as in Swan now in Bombay or Bengaluru, as in Karnataka. It's now only in Gujarat, where the textile business is. Within that Gujarat, what happened is he came in contact with Mr. Narendra Modi, Chief Minister, and he has a close association with Narendra Modi. As in that's what, as per there's an article which refers that, which is by the wire from Rohini, which says the platinum touch of Nikhil Merchant. This is what the article is all about. In India, it's very common to have business people have affiliation towards a particular party or particular politician. And this guy is one of them. It's nothing wrong, but that is what it is. So he came in contact with Modi as per this article. I'm not claiming it, it's true or false, but that is what the article is talking about. And I can link it somewhere or the way, something like that. You should go through this article, try to understand what happened, how it went, and what things happened with once Modi becomes chief minister, and then he becomes the prime minister, basically. So whatever happened with Adani, the same thing happened with this chap also. He was also raided by income tax guys in 2014 by Mr. our prime minister, ex-prime minister at that time, Manmohan Singh. But he was not famous like Adani, so he somehow got dropped from all the Ambani, Adani circle names, but that is what it is. So this is one part which I wanted to highlight, that how it got linked with Swan. And in the between, then there's another article which says Achhe Din of Swan Energy's promoter, which is Nikhil, as in not promoter, is a managing director, Nikhil Merchant. I've mentioned the link. I will share the screen, this Word document to you, and that is how it reflects what things happened with Swan Energy, and how and in the same time the Reliance Defense was going wrong as in, and there were other companies also, which is one of them was Veritas, which was going wrong. He acquired stake in both the companies. Veritas, it was direct because the promoter sold the stake because he was not able to flourish his business the way he wanted to. But as soon as he ventured into Veritas, it started moving up and it becomes 8x, 10x basically. So that's one of the things. And the same Midas touch will continue with Reliance Defense, which is what my assumption is. And here I will just wanted to highlight this is the business structure of Swan Energy, where it talks about Veritas being one of the subsidiary, not 100%. Fortunately, 45% stakes are still available with public. Then these are the remaining firms. Within that, this is the part which is called Hazel Infra, which is a subsidiary of Swan, and remaining 24% is with company called Hazel Mercantile Limited, which there is nothing to mention, but Hazel Mercantile is was one of the subsidiary of Veritas in FY23 annual reports, which in FY24 is no more than a subsidiary of Veritas, basically. So 26% with Hazel Mercantile is basically 26 multiplied by 55% is still with basically Swan. As Swan is basically the owner of more than 74%. Maybe there was a regulatory requirement which requires 74% only, and that's the reason. But he has more than that as a stake, out of which 95% is invested in Reliance Naval, while the remaining 6% is with the existing shareholders who got share capital reduction. For every 275 shares, they got only one share. Whosoever had more than 275 will get in the multiples of that. Otherwise, they won't basically. And that part owned defense and shipyard. Let me give perspective about defense and shipyard over here. Reliance Naval is far bigger than Mazgaon, okay, as of now, and was far bigger than all the combined shipping industry, let's say 3 or 4 years back before going through this NCLT. Now, what is the current stage? Nobody knows because there is no annual report which highlights what went wrong. For that details, we have to go through the NCLT report, what has been taken over by creditor, which I did not did. I did a basic maths calculation. I looked into the historical records of 2017 of Reliance Naval, and I saw 4,000 crores of assets which was there in Reliance Naval. Along with that, we had 5,000 crores of asset was with Reliance Naval, and 4,000 was in capital work in progress with Reliance Naval. Around 9,000 crores of assets. Giving that as a perspective, which Mazgaon Dock currently has assets for only 1,000 crores. So it was basically 9 times bigger in 2017-18. That is what it happened. But capital work in progress is now shown as write-off. Maybe the creators took it over or scrapped it out, or it stays there right now, but nobody knows. That's what it is. So, but still, it has bigger assets. Annual in terms of Reliance Naval, it has bigger assets than Mazgaon, which is not being utilized, which is now redundant as of now. But they are talking about starting it up. So people will ask me that they have acquired this firm, let's say 1.5 years back, but still they are not able to start it. And is it not part of existing balance sheet and P&L? The answer is no. The existing P&L balance sheet does not include Reliance Naval because it's predominantly only Veritas assets, Veritas sales has been added, which lots of people think that this is being added in Reliance Naval sales and P&L has been added. That's the reason Swan Energy's profit has grown multifold, but that's not the case. Reliance Naval has been taken over, as in handed over right now in May 2024. So in last Q1 quarter, it got handed over to Swan. So said that, so they have taken right now, and many people might know that they already have assets. They already have assets, Reliance Naval, where there are ships which are worth 2,000 crores. which as of now the valuation is, मतलब मैं आज की आज ही बेचूंगा 2000 crores मेरे को मिल जाएंगे. The funny part about Swan Energy is they acquired Reliance Naval, and how many crores? They acquired Reliance Naval only by paying 300 crores cash, and remaining 1850 crores will be paid in next 5 years. In next 5 years, okay. So they still have time to pay 1850 crores, and they have paid only 300 crores. So 1850 is not a big deal for them right now. अगर आज के आज बेचेगा तो वो सिर्फ ships के मिलेंगे. Assets are different. Ships basically are not there. It's an inventory kind of thing करके. So that will be part of Swan's energy. Now, apart from that, this company being so big, and this company have previously got into the dismantling of ships, which nobody else can do as of now in the big ships. I'm talking about very big ships, because their capacity of making big ships and dismantling it is far better and far bigger as compared to any other company right now. And that is the reason, due to this maritime 2030 vision of our government, we already saw multifold returns in all the other shipping companies. The same thing likely gonna repeat over here. And that's the reason they might list it. So the listing would be happening around, as in एकदम कच्चा का भाव भी बोलेगा तो फिर I will say 1,20,000, 1,15,000 15,000 crores का market cap आ जाएगा, which is what Mazgaon is getting right now. So they will sell, how much they will sell, I don't know, but as per regulatory requirement, they have to sell up to, they can hold up to 75% only. So the reality is they already hold 74%, so they might not sell anything. They may ask Veritas to sell it. Sorry, Hazel Mercantile, which was a subsidiary, which is no more a subsidiary, and they will sell it, and they will give a 1,850 crores. Now, what they do with the remaining amount, I don't know. I frankly don't know, but that they will be cushioned with lots of cash, lots of things. But if you ask me, given when Reliance Naval get listed, if at all I look into the valuation, if it all is lesser than the Mazgaon Docks valuation, I will straight away buy it. As in, that's what my thesis is gonna be. The second thing which I wanted to highlight is there are two other parts which nobody focuses: Swan LNG Private Limited and Tiram Offshore Private Limited. Offshore Private Limited. Here it holds 51%, which is wrong, which is now gonna be 100%, because they happily took over 49% from IFCO for how many crores? For 400 crores. 400 crores for 49%, which somehow IFCO felt and realized that it is wrong, so they objected it. So they objected it. Where it is, sorry, I have not attested the link or what, where it is. Okay. So Swan Energy acquired 49% for 440 crores from IFCO. 49%, sorry, I was wrong. 49% from IFCO, and they paid 440 crores. This is what the article is all about. Then on March 4th, IFCO realized that this is wrong. So they went and said IFCO moves NCLT against Tiram Offshore Swan Energy, that they are objecting towards this company, that how could they take over. Something happened again, and now you can see that on June 28th, there's an article which says that IFCO has withdrawn that case from Tiram Offshore. But why this happened? What happened? Why they got into and then backed out? Why 440 crores is less amount? Just to give you perspective, this is what Petronet LNG is building less FSRU, similar unit of 400 million tons, and their expected cost was around 2,300 crores. Okay, this is FY 2022 November. 2 साल हो गए. Okay, the cost will rise basically. That's what my expectations are, and this is for 4 megametric. What is Swan acquired is 5, and they got already existing players, which is Gujarat Maritime, Gujarat State, and Mitsui Osk lines. Mystery Oak is I don't remember, is it Korean or Japanese? I don't remember. But the main guy who is from this company, he attended Maritime 2020-30 Vision. I should have attached that link also. I forgot to attach that link. But that particular chap is a very big known player in this Maritime and big players. I will share that details, and that is how this FC this particular space, this Swan LNG and this part is also gonna generate humongous revenue in coming years because they are already booked in terms of capacity. जैसे ही वो लोग खोलेंगे, clients लगे हुए रहेंगे करके, वैसा है कर. And that's it. As in, so Reliance Naval will be a cash generator for them, and this is gonna be compounding machine. It's like multi-bagger plus compounding machine over here. So I expect Swan Energy to do very well once they do all these things correctly, unless and until some income tax या कुछ government का changes कुछ हो जाएगा, then I don't know. But Swan Energy is in very good place. You should definitely have a look, but don't go by numbers. If you go by numbers, you will feel like ये बहुत भाग चुका है और भागेगा कि नहीं. But just to show it to you where it is. Swan Energy. Swan Energy this is what their quarterly results. This is standalone, looks fantastic. Okay, this is fantastic, looking 586 crores consolidated revenue. When you click on standalone, you will see the reality. The reality is with standalone, they are not doing anything. There is nothing, but everything is consolidated, and that is only predominantly because of Veritas. Veritas will also do good, by the way, because they are also doing manufacturing. Somehow, when they acquire the stake from that particular firm, the previous owner was not able to develop a particular port, which Swan Energy was able to develop within a span of 2 years. And then Veritas, Veritas jumped like crazy. Here, if you see the graph, this was the Veritas. This small prices, this is, see, this is all created by Swan at that time, and then moved, and this is what happened. Sorry, this is not Swan. This is not sorry. This was the Veritas. My mistake. Veritas. Okay. Huh. No. December 2022.
Yeah, Mithun, I think you have more, not from 2 or 3 minutes maximum.
Okay, fair enough. I will drop now. So thank you for giving me time. If you have any questions, please feel to message me, WhatsApp me, or let me know just on Twitter also. It's okay. Any other companies which you feel like it's a fantastic opportunity, feel free to let me know. I normally do this all kind of analysis, so I will be happy to share my details also. Thank you.
Sure, thanks, Mithun. We'll hand over to Amar for the last presentation of the day. Hello, Amar.
Yeah, Pankaj.
We are able to see.
Okay, you're able to see the screen, no? Okay.
Yes.
For some reason, I see only the top part is being taken by the toolbar. Let me see if I can drag it down. Okay, so it does take some space somewhere. Anyway, so hi guys. Last presentation. So I'm hoping that I will get the easier part of it because already the brunt of the questions I think you guys might have exhausted. So let me start with my presentation. I will be talking about Vishnu Chemicals. To start with, why Vishnu Chemicals, especially if chemicals as a sector still seems to be in a doldrum, right? For the past 2.5 years, they are not in a good space. The whole sector, it is not performing, and there are reasons for it. Major export market is Europe and USA, and because of various reasons, it has taken a hit because of macro conditions like war between Russia, Ukraine, then the Red Sea crisis, and so many other things. And on top of that, in the chemical space, China is always there, where it is always ready on one foot to start dumping things whenever things start looking rosy. So there have been challenges, and I think chemical sector, at least now, the reasoning is that it has bottomed out from a valuation perspective, in the sense that from here the downside looks minimal. And in certain players or like elements of those chemical sectors, certain players, based on the story of theirs, like what they are catering to, what is their core offering, we are seeing green shoots where the stocks have started moving up. And Vishnu Chemicals, I think, is one part of that. So Vishnu Chemicals, it's a 30-year-old company, 30-plus-year-old company, in fact, established in 1989. And it's a market leader both in India as well as in global in the chromium chemistry and barium compounds. So these are the two things where it focuses on. I will talk more in detail like as we go down the slides. But in these two spaces and in certain within this offering, for example, if I talk about chromium, now they are coming up with a chrome metal, which no one else is doing in India. It's 100% import market right now in India. And Vishnu Chemicals now has got the capability for those chrome metals, and that is having applications in defense and like welding, electrodes, and those kind of stuff. So this is where the focus is. When you look at the Vishnu Chemicals and the management read about it, their focus is very clear. Like they will be focused on the chemistry of it. When I say chemistry of it, from a technical perspective, how do we go about developing new compounds? How do we widen our offerings to go into new areas, bring new offerings to the table, and which usually will have no kind of competition in India or even in global scale also. So that is how they are going about it. On the right side, if you see on the box, I have given the basic parameters. ROC, ROE, even when I say the past 2.5 years is sort of a bear market for the chemical sector. Rest of the market is booming, but chemical sector has not gone anywhere. But Vishnu Chemicals has managed to hold on to their margin, first thing. Second thing, they have, in fact, credit to them, they have managed to increase the revenues as well as we can see an uptick in the operating margins also, which is a feather in the cap, because in a beer market kind of for the chemical sector, if that is your performance, when the climate starts changing and then the things start going in your favor and chemical sector again comes into favor, they get the tailwinds, this will fly. That is the whole thesis. So not exactly turnaround. Turnaround will be a very strong and harsh word for Vishnu Chemicals, but at the same time, they have got the story in place. They are still holding on to their capabilities. They are still holding on to their clientele. They are still holding on to their margins as well as sales revenue figures and all. And as soon as the sector comes into play, which I think at the max it should be like a 2 quarter or 3 quarter down the line, the major thing would be like the export market opening up, and then the Red Sea crisis where it is hitting us on the logistics side. If it softens, that is where things will really start getting interesting, and that is where the whole thesis is around. So currently, if we look at it, CMP of Vishnu Chemicals is round about like 440 odd rupees. That is where it is kind of consolidating. But if you look at it in the past 1.5 months, it has 40% plus percent growth. So already some growth has come into from a stock price perspective, not from a business perspective. Already people have started latching onto it, which kind of indicates that good times are not very far away. And I will talk about more as I progress down the slides. I will give a minute. Means by this time you must have gone through this, and anyway the recordings will be shared, so you can read through some of those details. Not every details I'm going to read through, but salient points. If you look at it on the right side bottom box, it gives the figures like it says 50 plus export destination. When I say export destination, these are the countries which Vishnu Chemicals is catering to. And in fact, like if you look at it, it is more than 80 right now. And there are like 10 end use applications which I know has already gone up. There are about 8 applications which are in the chromium chemicals, 2 in the barium compound which is already productionized and being executed, and there are like 2 in the pipeline for the chromium ones, chrome metal being part of that pending, which is the capacity is coming up. And there is another one in the barium segment. In the con call, the management has not been very detailed about like what are they working on, but they simply said that there is a very strong solvent which they are working on the barium compound, which will add to its further capability. So there are like mentioned combined, it is like 12 compounds, 12 offerings which is already there, and 3 are in the pipeline. So having talked about this, look at the one figure which I will refer to in the next slide also. For a market cap of around 2,800 crore company, debt is now come down to 315 crores, and the debt equity is 0.45, which is again a feather in the cap for the management. And I will refer to it in the triggers, like a trigger wala slide down the line. I'll move on to the next slide. Next 2 slides, I'm not going to. So next 2 slides, I will not dwell much on it. This is just a milestone kind of thing. Like I said, since you will get the recording, can get more into the detail. The idea is it's the company has been in existence for already 3 decades plus. So it gives their long holding capability kind of thing. They are in the market to stay, not run by mill operator kind of thing. And over the period of time, they have kind of like where needed, they have changed focus. They have gone for inorganic growth, and they are gone for new chemical compounds and all. And this is how they are currently placed. Some of the application, when I talk about like chromium and barium, वो chemical एक formula जैसा हमको समझता है, but what do we do? मतलब what is it used for? So one of the offering, like when I talk about Vishnu chemicals, for example, precipitate barium sulfate. This is a new offering which they kind of kickstarted. What it essentially means, apart from that chemical sounding name, is it's a basically white inert kind of subject, and the property of it is not, alkalis don't act on it, the acids don't act on it, and it is not even affected by the, forget about the normal heat rays or the sun rays or something, even ultraviolet rays and all, and infrared rays, they have minimal impact on it. Where will this property of this particular compound which they are manufacturing will come into use? They will come into use when you are making a dyes and pigments, or when you are making tiles and all. So what happens, because of the property, it remains new like for a longer period of time. The longevity is there, and that is where Vishnu Chemicals comes into command, because this is a differentiator product. We will talk more about it in the other slides. And these are the various application areas where we look at it. In pharma, it is used in leather, automobile, paint, ceramics, those kind of things. I will focus more on the current year, what is happening and all, because this is where the thesis is. Because like I said, chemical sector was in a bear market for the past 2.5 years, where most of the stacks, they have gone down like as high as like 40% to 60%, and they have been consolidating in that lower range for a long. In spite of that, if you look at some of the figures, consolidated gross margins, if I look at it, in fact, it's a single digit growth only kind of thing. But in that kind of bear market, Vishnu performing this way, where they are successfully able to increase their OPM, is credit to them. Same way, EBITDA margin is happening that way. Net cash flow, again, if you look at it from 17.79 in the second half of FY24, they were almost kind of like tripled it. So that is what we are looking at. And the debt to equity, again, this is a conscious focus which the management has told in their con call about like 4 quarters back, that they are having this in their radar. They want to get it down, and they want to eventually get to the debt-free status. And you can see that across 3 years, like from 1.31 to 0.91 to 0.45. This is the debt equity ratio which we are talking about. So management is walking the talk, and that is where we can rely on them. Management is there with cool head, and they are promising something. It is not a mere promise, not a mere talk. They are executing on that too. The second part I talked about again regarding the export. frankly, if I look at the global scenarios not at all conducive for exports. Why? Because when from India we export, more major market for us is going to be either Europe or US, because that is where the money is. Obviously, we will have the Asian countries also. We will have UAE and other countries. But then the major markets and the major money still flows from Europe and UK, US. And that has not been conducive because of various factors. Like I said, one is the Russia-Ukraine war, if you look at it. Second is the Red Sea crisis. Red Sea crisis has hit Vishnu Chemicals very hard on two fronts. One is the transit times. Previously for export, like if something used to take 2 weeks, now it is taking at least 4 to 5 weeks. So this transit time, the increased transit times, it directly adds to the cost, transport cost, right? Logistic cost. So that is one thing. Second thing, it is very unsafe kind of thing. It's the business itself become uncertain kind of thing. So that is there. So from cost wise, it is hitting. From time wise, it is hitting. Why I say time wise it is hitting, because then you have to increase the inventory. You have to it is all connected. That is how it flows. I'll cover this more in the detail in the coming slides also. Moving on to the next slide. So like I said, Vishnu Chemicals, these two things, barium compounds and chromium chemicals, they are the market leaders. In India, though, they are market leaders only. Global also, they are in the top 5. And within barium chemicals is now where they have started getting the more traction into. They are coming up with, they are innovating, they are coming up with new compounds. And this new compounds is getting into the pipeline where they are kind of like coming up with end products, and that end products are getting traction into the market also, where demand is huge there. And right now, they have just innovated, come into it, so they are not able to meet the demand. So there is a big potential there where the volumes are bound to increase. So first point itself, if you look at it, sales volumes of barium carbonate increased 13%, but then the demand is such that they are going forward within the next 2 years, they are talking about like 30 to 40% volume uptick will be there. Similarly, on the chromium chemicals, they are again focused on, see, bear market anywhere. It's kind of a misnomer, right? When I keep on saying bear market, but please bear with me and understand that I'm talking specific to chemical sector. Otherwise, last 1.5 to 2 years, देखोगे तो it's a booming bull market. जहाँ पे देखो like everything is running, but chemicals as a sector has been in the doghouse right now. They are not they have not participated in that boom, and Vishnu Chemicals is a constituent of that the chemical sector, and hence whatever it can salvage and what can outperform it shows, that has to be given more credit for, because come the good days, then it will run. That is where the focus is. How are they coming up with this performance in spite of all these bad days and the export being hit and all? They are kind of like focusing on the basics. They focus on the backward integration part. They focus on like what are the where needed, like they have done multiple capexes of like say 20 crore, 40 crores, where they have revamped the whole process. They have revamped the whole assembly line so that get the maximum efficiency out of it. So these small steps, they have contributed in a big way. For example, again, if I talk about Vishnu Chemicals, they have a very strong focus on ESG. When I say ESG, it is more from a compliance perspective, so that less harm is done to the environment. How why do I say they have that strong focus? For example, if you see, they have installed a 4.3 megawatt solar power in Q4. What happens that way? It's a renewable energy. You are contributing. One of the raw material being used for their chemical process is usage of carbon dioxide, which is a big no-no from a global warming perspective. But then whatever they are saving in from this renewable energy and all, you use it as a credit, so that net outcome is it should have a zero footprint. They haven't yet reached there, but that is their focus, where they want to get into that net zero thing. So that focus is already there. Another factor is like when we look at any kind of chemical process, when we are want to do, there will be certain outputs and outcomes which are part of the chemical process, but which are not needed. Some of the effluents which will come out, which will be harmful to the environment. Then you have to apply like for zero discharge water or something, that kind of thing. Some process has to be applied so that you ensure that your harming footprint is minimal. Whatever you can salvage, you have to salvage from it there. You have to recycle it, you have to reuse it. And that focus is very clear there from Vishnu Chemicals. So they are very big on that. I will down the slide, I will talk about when I talk about the antithesis or risk, I will talk about this again. But at this point of time, at least the management has shown that they are committed to the ESG part. They are doing their best and they are keeping that in mind whenever they come up with the new process and all. That is what we need to keep in mind. Correct? Some of the key highlights, if I talk about it, exports accounted for 48% of total sales in S2 24. So it is kind of inching upwards only, in spite of all the challenging scenarios which I mentioned before. And because the debt has come down, interest coverage ratio is good. The finance cost decreased from 24.8 crore to it was 27.8 crore, and from that it is coming down. So that is again a very focus area for the management to work on this. I'm not sure whether this slide is very visible to you guys. If not, don't worry. Many of these points I have already covered in other slides also. This I wanted to just highlight ki last quarter का if I look at it 3rd June 2024 में जो हमको Q4 FY24 का con call transcript है. This is a snippets which I have taken from there. It is across those like 14-15 pages में से what are the salient points. This all kind of highlights like what is the management focus, how they are walking the talk, and how they are trying to go through the hard times. The way we tell it ना, जब मुश्किल का समय आता है, when we are in trouble, when the trouble times comes in, we kind of like pull back on our expenses, and every matter of like whatever you are trying to save, kind of that helps. That goes to the bottom line and the top line. This is what I mean by that. So this is just a highlight of that. I'll give a second, keep it for 2-3 seconds here, and then move on. Like I said, if I look at some of this will be covered in the subsequent slide where I talk about the triggers, where I talk about the antithesis and all. That is all coming from those con calls only. So initially, when we look at it, when I say initially, it was like pre-2020, because pre-2020, again, it was in a very sideways consolidation mode. And then suddenly it went into a stage 2 where the stock price skyrocketed. In fact, I remember like when I came, this is just a snippet, like offline kind of comment kind of. Vishnu Chemicals was one of the stock covered in Alpha Affairs, the website, Puneet's website. This was somewhere around 2022, Puneet. I think that was the time. And then it had tremendous run. Then the chemical sector tanked, so this also tanked along with it. So from that time, like I made some money on it. This stock was on my radar. And that is why I pulled up for thesis now, because I think, again, the good times are on the horizon. And provided the macro conditions help, management execution is already there. The demand comes in and this stock is ready for flying again. Third point is important over here, triggers, when we talk about it. One of the North America competitor, which is Elementis. Elementis had a plant in North Carolina, I think. North Carolina is the one where it is like more into the hurricane prone area kind of thing. And there was one in Ohio also. So this Ohio wala plant, they are closing down. And since that plant is closing down, this the barium compound which we talked about it, that was being manufactured in that plant. And the moment it got closed, suddenly the demand from the vendors started skyrocketing up. And that is where this demand is helping up Vishnu, because Vishnu Chemicals has started, got its footprint into USA now because of that main product. So USA as an export market, it has opened up. The only thing why it is not flying around is because of the other challenging conditions which persist. But this is one big plus factor. The second big plus factor obviously is the China plus one. So when we say China plus one, the way USA and China are going on that trade relations and all, trying to outdo each other and trying to ban things and all, obviously then we are going to look at other vendors which can fill into the shoes. And India is obviously a bright spot right now in the global markets. And within this chromium radium one, Vishnu Chemicals fills the empty space. So the China plus one is also a model which is going to help Vishnu Chemicals. This is what I was talking about, carbon dioxide recovery and acidification plant. It was a game changer because it brought down the cost of production and has improved indigenous production of sodium carbonate. Now, this sodium carbonate is one of the outcomes of this chemical process, right? But another output which comes along with sodium carbonate is soda ash. And soda ash suddenly last year, if you look at it, if you have been following certain companies which are into soda ash and all, the price has kind of rocketed and it has tripled. So from 20, it first went to 49, and I think it is in hovering around like 60, somewhere around that place. So when they did this backward integration and had this carbon dioxide recovery plant set up, one of the outcome was so they got into the manufacturing of soda ash also, which is again a input material, raw material for the whole process itself. And the capacity now they scaled up to 30 kilo metric ton per annum. So this is what I mean, where they're going into backward integration, but at the same time fulfilling the whole supply chain. And everything is kind of inwards. Previously, if we look at it before this, they had this plant in place. Soda ash was like fully kind of like either bought from the market or imported. Now more than 50% it is met in-house only. That is what I mean by cost saving. So 50% in-house produce ho ja raha hai, and the intention is to scale it up more so that the dependency kind of goes up. Another game changer for there was like 1 year back, exactly 1 year back, somewhere in July 2023, they acquired Ramdas Minerals Private Limited. Ramdas Mineral Private Limited, if I talk about it, what does it do? It takes a very low grade kind of barytes. Barytes are nothing but barium when we are mining for. So jo ekdam raw form mein aata hai, that is called barytes. But it's a low grade one, right? When I say low grade, what happens? There are so many impurities which are there. Now, Ramdas Minerals basically has a beneficiation process in place. The whole business model is that beneficiation. What it does, it processes the low grade barytes. It goes through different steps 1, 2, 3. And eventually, when it will come out, it will take out all the impurities and it will have a high grade pure barytes, which can be used further down the line in the barium compound, whatever chemical processes we are going to say. Why this was a game changer and a strategic acquisition for Vishnu Chemicals? Because barytes is obviously a input raw material for them right at the start of the process. So now Vishnu Chemical doesn't have to spend very highly on the pure grade barytes. They can get a low grade barite. Ramdas Minerals will process it, eventually end up with a high grade. So the cost kind of comes down drastically. Second thing, since they have acquired Ramdas Minerals 100%, it is in-house. So the cost savings has kicked in. Second thing, the dependency on import or like for other mining vendors for this particular barite as a input raw material, it also has come down very much. So this is how it has been. Right now, the management has kind of signaled, they have not confirmed it in so many words, they have not come outright. But then whatever they need, they are, Ramdas is currently at a 70% utilization only, and it is fulfilling their needs. When it goes to say like 80 or 90%, 90% is what they are aiming for to run the Ramdas Minerals. Then instead of only just being a agent in between, which is kind of converting low grade to pure grade, it will also become a profit center. Why? Because their demand is only X and Ramdas is going to do X plus plus. So whatever is surplus will be sold into the market. So this is the whole story behind Ramdas Minerals. And again, another point which goes in favor why this was a strategic acquisition is this was in Andhra Pradesh, where already Vishnu Chemicals had is Srikalahasti, I think is the place. I am kind of forgetting. It is in Andhra Pradesh. I think it is Srikalahasti only. That is the place where Vishnu Chemical had its barium plant, where it processes barium, and Ramdas Minerals is right in Srikalahasti only. So उनका value जो supply chain बन रहा है, now it is geographically also very in the same proximity, right? So that way also the synergies kicked in. Logistic cost nahi hai abhi kuch bhi. So in all those ways, this has kind of held up. And within 1 year, Ramdas is already at a 70% capacity utilization, and it is already contributing tremendously to the bottom line and the top line, and that is one reason why you can see the uptick in the top line and bottom line of Vishnu Chemical. Correct. Moving on to the next point, this is like always the focus of the management, where they are always looking out for expanding capacity. They are also kind of looking out for value products. Once they got the input raw materials and to the outcome, they are also kind of thinking within this, what are the derivative products which we can add on, or we can improve the bearing business, which is the new one, relatively speaking. So these all features have contributed to the better performance over the last 2 years, if you look at it, and that is reflected in the stock price currently. But the potential is a lot more. Talking about management, if that point refers to this, promoters have given interest-free unsecured loans and also foregone part of interest on preference shares. This kind of gives confidence on the management that they have skin in the game. They have a vision. They know where they want to take the company, and they're doing whatever is within their purview to ensure that they get there. So, like I said, their focus on the ESG part, their focus on strategic acquisitions, their focus on how to kind of like ensure streamlining the operations, cost cutting, and those kind of things, all bodes well. This is the second last point. If you look at it, precipitated barium sulfate. This was the project which I was talking about. This was at 24% capitalization in the first 9 months, but last quarter, if you look at it, the utilization has increased to 40%. This is because of the backward contribution, which contributes directly to the top line, bottom line. This 40%, again, they are going to ramp it up. This is in the focus of the management. They are going to take baby steps, like they're targeting 60% net, and from there they will take it up. Right? So these are the triggers, like this is the whole thesis about like why at this point of time we are looking at Vishnu Chemicals from the chemical sector, where the chemical sector is still not fully out of the doldrums. There are chances that there will be a quarter or two where it might stagnate or like do consolidation sideways. But the triggers are in place, and when like everything falls in place, everything aligns strategically, this will have a run up. And that is why presenting this talk today. Moving on to the next slide. We talked about the triggers. These are some of the risk and antithesis points which we are covering here. I have mentioned this before. Exports is still a tough scenario. There are various reasons for it. The war between Russia, Ukraine still ongoing, not resolved. We talk about Red Sea crisis. It hasn't been resolved yet. So transit time we already talked about, like it has increased the timelines. And because the timelines has been increased, at times like indirectly it will have an effect where you need to have inventory of both input raw material as well as finished goods. Why finished goods? Because last moment the demand comes from someone like some client of yours, then you need to be in a position to fulfill it. So if you look at it in the cash flow and the balance sheet, the inventory thereof like about like 100 plus crores, like there is in the bump in the sense slightly negative for that, not handled properly, that can come back to bite Vishnu Chemicals. But at this point of time, I don't think it is in their hands. From a business perspective, they have to serve the client. So some of the tough decisions needs to be taken from there. There is a third point is pricing pressure dumping from China, especially in barium, the precipitated barium sulfate, which I was talking about. Why is that an issue? Because China, when it comes in, nobody can match them really on the costing front, right? They will have the lowest value in spite of all the process efficiencies and other steps taken by Vishnu Chemicals. You can hardly compete on that. So then how do you compete with this particular thesis? Means if it's a negative, how do you balance it? The way the management of Vishnu Chemicals is looking at is they get involved directly with the client. They make their output like whatever the output they are looking for, be it precipitated barium sulfate or something, and make it to specification. Different clients might have a different things. They'll tweak it that way, and it will make as per specification. So first thing, it becomes use flexibility to the client. Second thing is the packaging again. Like for example, if you are exporting, it has to go like cover so many long kilometers. The packaging is being kind of like flexible packaging. Those are being taken into account and all. And the third and the most important aspect of is quality. They don't Vishnu Chemicals management, like they have this foresight on the quality. They don't compromise on that. The whole process. They have been in this business for 30 plus years, right? And they are very clear. If we know how our processes work, how do we make it work, and we are not going to compromise on that. We know how to do this thing, and this is how we do it. That focus on quality, the flexible designing aspect of it, and the flexible packaging aspect of it. These are the three things, and then obviously there is a China plus one wala syndrome back in the mind of the clients also, right? Especially in Europe and USA. That being the case, that is where like will mitigate some of this dumping from China. That is where we are going with that. The next point is related to the ESG norms. Any kind of like government regulation kicks into place where they have bring more stringent conditions on the pollution control or environmental norms. Once it's a regulatory thing, it's dictated by the government, you cannot not comply it. You have to comply it, and for a compliance, there will be a cost. And if there is a cost, it's going to directly negatively affect your bottom line, top line, right? So that becomes one of the risks. But like I said, ESG is a very strong forte for Vishnu Chemicals. They already have that in radar. In fact, if you go and open their website, at the homepage itself, like if you look at it about the company, on the right side, they have a mission, and within that mission, there are 3 points. Third point is related to ESG. When you include the ESG related norms and that you will comply in the mission itself, value statement, mission statement, that speaks a lot about the management focus, right? So even though I have cited it as a risk, it can still hit us because government can come with any arbitrary rules or regulation. But at least it is within the radars. And today, Vishnu Chemicals, I will say, is doing more than what has been asked of them. So again, it's a risk. And even if it materializes, depending on what comes, we will have to take the call. But otherwise, it's a good thing. Last point I talk about is prone to currency risk based on fluctuations in foreign exchange rates. But then it works both ways, right? Because if we talked about it, today, if we look at the market composition for Vishnu Chemicals, domestic is 55% and 45% is export. And in the next quarter, they are planning to ramp up that export from 45 to 48. How does that help? Two ways. First thing, like whenever we are exporting to the developed countries, the OPM kind of takes a bump up in the sense it improves. That is the first thing. Second things, when you are importing raw materials and other stuff, the foreign exchange rate becomes a risk, but now you're exporting it back almost like 45 to 48%, right? So it becomes a zero sum game kind of thing. तो वो रिस्क है लेकिन उतना बड़ा नहीं है अगर हम एक्सपोर्ट नहीं करते और खाली इंपोर्ट ही करते होते या द अदर वे नाउ so it kind of like balances out. So these are some of the risks which I could think about, Vishnu. I'll move on to the next slide. We talked about the fundamental triggers in place and all. Now we come to the technical analysis aspect of it. And technical analysis aspect of it, if you look at it, this is the chart which I have in front of you guys. I'm not sure whether you guys are, the font I think is a bit smaller in this yellow box. I have kind of
It's
tried to
visible.
capture it's visible.
It's
no?
visible.
Good. Okay. So basically here, if you look at this particular chart, this purple lines which you are drawing, it is nothing but a symmetrical triangle. Symmetrical triangle, what it does, it converges onto it. And whenever there is a breakout on the symmetrical triangle, what it does is it tries to contain the momentum of the side before this consolidation started happening. So if we look at it, right from here, the consolidation was there. But before that, look at this particular, this was a pure stage 2 run. This stage 2 run is what I'm counting on. Like once it has come out, it has already come out of the symmetrical triangle and with good volumes to both. Look at the average volumes and look at the volumes over here. This is a weekly chart. So within a month or so, what we are looking at is pure like buy volumes only. It is breaking the symmetrical triangle. And the second aspect of it, it is breaking the consolidation rectangle also. Ideally, I was planning to put the rectangle from 380 from this aspect of it. But then I thought I will cover this outlier also. Because of that, the rectangle has become a bit bigger. But both the symmetrical triangle breakout has happened and the rectangle breakout, consolidation breakout also has happened. Last 2-3 days, market became a bit volatile more and the price has come out. But we will see, like there are two stop losses for us. One is the rectangle, the support part, and then there is the symmetrical support part. Those are the things which you need to look at it. But when I holistically look at this whole picture, things kind of seem to be gelling now from the fundamentals. Now we have seen where the triggers are, where we are looking at kind of in performance it is showing. The top line is increasing, the bottom line is increasing, the OPM is increasing. The OPM, if you look at it over a 10 period of time, 13 to 15 is the range it was looking at it. Last quarter it was 21%. In such a down scenario, if you are able to increase your operating profit margin, that means you have a product which has a demand in the market. The clients are willing to pay for it. And frankly, this Red Sea crisis and the war between Russia and Ukraine has gone for so long. Even the clients now have kind of like given into the fact that, yes, now what is happening is this is there for stay. The cost has increased and it is not going to go down immediately in near future. What cost I'm talking about? I'm talking about the logistic cost. Red Sea crisis है तो मेरा transport और logistics cost बढ़ जाएगा. That is one part of it. Second thing is raw materials का cost थोड़ा बढ़ जाएगा because now it has become scarce, right? Because there will be delay everywhere. So when the clients gets into that mentality कि हाँ ये तो है अभी, it's a fact and we have to pay for it. That is where Vishnu Chemicals is able to leverage like whatever like the price increase hits them, be it the raw materials, be it the logistic costs or something else, and it is able to transfer it to the clients. So end client has absorbed that cost, and that is where the operating profit margins are maintained, or in this case, it has started trickling upwards also. So fundamental wise triggers are in place. Technical analysis, if I look at it, things look good unless like we see by next quarter what happens here, whether it is going to retest the support, which support we are talking about, whether it is going to rectangle breakout ka dekh raha hai ya symmetrical ka dekh raha hai. If not, there is a very strong possibility that it will again enter a stage 2. If it enters a stage 2, frankly, after 484, it was the last high for Vishnu Chemicals. Just from technical analysis perspective, I look at a price of like around like 600 to 650, but that is just a projection at this point of time. If I look from a fundamental perspective, looking at the EPS and PE at this point of time, if I give 30 and like suppose the last quarterly EPS was round about, let me have a quick look at it. When I switch to my, I'm at screener now. Are you able to see that, or do I need to share it again?
You have to share it again.
Okay, it's a 1 point only, so I'll just mention that you can see this in screener. March 2024 का EPS is 4.23. 4.23 को मैं अगर ईयर में ऐसे डायरेक्टली किया तो भी it comes to around like 16 to 17 rupees, right? तो 17 rupees और 30 का अगर मैंने PE दिया तो the price crosses like 525 to 550 के बीच में, whereas the current CMT is 435 and that is after a 40 plus years run up वाला part. So fundamental wise also if I look at it 550 के आसपास में मुझे आ रहा है. Technically if I look at it 650 700 आ रहा है, and after that it's going to be a blue ocean strategy. मतलब it is in an unknown territory. When it gets the tailwinds and the chemical sector comes back into favor, we have seen that in the past also, right? The stocks run up, then the pricing and the valuation take a back seat. So we will see how it goes. So this was my whole thesis on this Vishnu Chemicals. Moving on to the next slide. This is a bit crowded slide. What I will do now, this is nothing but this particular slide. If I look at it, whatever I talked about, whatever my thesis is, it has been covered here. I will try to increase the size and look at certain areas within that. So if I look at it, Vishnu Chemicals, if I look at end user industries, it caters to pharma, around 20 to 25% revenue is there. Leather industry में 15 to 18 आता है. Electroplating and wood preservative is another 20 to 25%, and paint and wood contribute almost 20% of the revenues. Highlights of the last quarter results, Q4 FY24 financials. We had a PAT of 101 crores and top line of 1213 crores. Consolidated sales itself, like it was of that particular quarter, it was 300 quarters. Long-term borrowings reduced. We already saw that, and these dropping to 0.45. And new cash flow from operations grew 179% during S2 FY24. We kind of covered it, that one particular slide we saw, no? 17.9 से directly 49 पे चला गया था वो. So this is the financial highlights which you are looking at. The risk antithesis we just now covered. Competitors I had not put in the slide, so I will look at it here. From India में इनका direct competitor है नहीं कोई. It is on the global scale only. So in Turkey there is Session2. One thing which I would like to mention here is Turkey is a country where they are kind of underappreciating their currency in terms of dollars. So when you underappreciate your currency in terms of dollars, what happens? You gain some kind of unfair advantage in terms of export and import. So that is going to be a challenge. But that is a challenge which is not in control of Vishnu Chemicals. It's a competitor in Turkey, which will, for whatever period they maintain that underappreciation, they will have the gains there. So currently, Turkey ka Sisicam is the biggest competitor for them. Elementis was there, but then their Ohio ka plant close करने के बाद में, this business is kind of getting redistributed to other companies. Their USA is not going to China, so it will come to India, which is Vishnu Chemical, Sisicam in Turkey, and Lanxess in Germany. Lanxess is a smaller competitor compared to the other two, which has like hardly 8% of the market share, I think. That is what I had read. China is obviously always going to be a threat because of the fact that they, any point of time, they think of like they just start dumping materials and that too at a scale. But I have mentioned like certain factors which Vishnu Chemicals is kind of taking care of. They are focusing on their quality. They are focusing on like flexible designs in consultation with the client as per the specs. And they are also committed on the flexible packaging and transports. So those are the three things where they want to mitigate that threat with. The fact that China plus one में certain geographies will not entertain anything from China also helps Vishnu Chemicals. But worst, push comes to shove, अगर वो उसी पे आ गया कि China is a viable vendor there, chances are that they will take the market in the short term because it's difficult for anyone to fight with China on the cost front. So if I look at here, current standing में strong tailwinds in both chromium and barium segments में है. Some certain focus which has helped them keep afloat is cost efficiency, strong market positioning, and strategic acquisitions. We talked about the acquisitions, just Ramdas Minerals, we talked in detail how it has helped them. This commissioning of precipitated barium sulfate also has there. And then the 4.3 megawatt. First thing, it's a cost saving because now you are having a renewable energy in-house. Second thing, you are getting carbon credit for that, which you can use for like the carbons which you are producing during your process. So that kind of like gets nullified. So if you look at this, achieved 90% in yield in carbon dioxide acidification and anticipates further improvements. This is again a tremendous thing. So this were like in the last 2 years, these were the strategic initiatives which Vishnu Chemicals had invested in, had done the capex for, and they are gaining tremendously from them. This forward guidance and looking is nothing but kind of repetition of like what we talked about triggers, what are the things which are going in favor of Vishnu Chemicals. I wanted to have one slide which kind of covers the whole thesis. That is where I came up with this. See, volume growth also, if I look at it here top on the guidance aspect of it, Vishnu is expecting at least 30 to 35% volume growth. And in certain value added products, they are coming FY 2025, 4 to 5% price increase. And in the barium vertical, which is relatively newer one, they are looking for bumping up the price by 10 to 15%. Barium vertical, right now, they do not have a competitor here in India. So anything which comes within that precipitated barium sulfate and other barium compounds, it has to come to Vishnu Chemicals only. They have the national market is within their hold only. That is why they want to take at least 20% of the market share. If there is no competitor, why only 20% of market share? Because rest of the things they were already imported, and slowly by slowly they will start eating into that market share. जो 100 raw material we already saw. When we talk,
Hello.
Puneet, when did I lose you guys?
Yeah, just the last few sentences. That's it.
Okay. Suddenly I
You
panicked.
can continue.
Arey,
Yeah, you
when did
no
that
no
get
you
disconnected?
no you can continue with the
Okay, okay. So we already talked about the improving feedstock quality. That is the Ramdas acquisition that happened, where they trade the low grade barytes, and then after their processing, turn it into more kind of pure grade barytes. So that also helps in reducing the raw material cost because now they don't have to go and buy pure grade barytes from the market. It is in-house now. New products in the pipeline, I have already talked about it. Like they are talking about a strong solvent in the barium compound, and in chrome metal is the one which they are counting on more, which should come in by next quarter, I believe. And this chrome metal again, they will be the only producer in India. It is 100% import today, and it has applications in defense as well as welding electrode industries, amongst others. So that will be a big earner, and it will contribute to the both top line, bottom line again. And the last point, if I look at it, plans for 10,000 tons of additional dichromate capacity coming online towards end of quarter. The capex has already been done. So when it comes in, the operating leverage will come into play, where without any expenses, suddenly the revenue starts flowing to the top line, bottom line, because the expenses already been incurred. So this was my thesis on Vishnu Chemicals. Now I will be open for questions.
Hi, Amar bhai, Ankit this side.
Yeah, Ankit.
Yeah, I was just looking at the balance sheet, and in that I can see a sudden spike in the inventory levels from FY23.
हाँ वो 100 करोड़ का मैंने बोला ना उन्होंने इन्वेंट्री ले लिया है. That is because of
हाँ
the
हाँ,
Red Sea crisis, right? So it is hitting them from both sides.
okay,
Why? Because the transition times, which normally used to take say like 2 weeks, now it has become 5 to 6 weeks. So
okay,
transit time has increased. Second thing is in these tough times, whatever clients they are able to hold on to. See, Europe and USA relatively from an export market perspective, they are not doing that good, right? लेफ्ट राइट में तो
okay.
उधर कंपनीज बंद हो रही है. एलिमेंटिक्स ने अपना शॉप बंद कर दिया, राइट, यूएसए में.
Mhm.
Why are they closing? Because believe it or not, and people might not kind of like directly come out and say that, but pockets of this developed market they are undergoing recession. अगर वो recession जा रहा है तो obviously that will also curtail the demand. तो demand जब इसलिए export hit ले रहा है, वो credit to Vishnu, they are showing bump up. 45% is still a export market for them, and in the coming quarter they are wanting to take it to 47-48%. बट अगर मेरे पास यूरोप से अगर डिमांड ही कम आ रहा है तो जो क्लाइंट मेरे को लास्ट मोमेंट में करता है, दैट टाइम आई नीड टू हैव फिनिश गुड्स इन्वेंटरी इन प्लेस सो दैट आई कैन फीड द डिमांड इंस्टेंटली. व्हेन आई से इंस्टेंटली इट्स जस्ट ए मिसनोमर, क्योंकि मैं हाँ ऑर्डर बोल के लिया, उसके बाद ट्रांजिशन टाइम 5-6 वीक्स तो लेना ही, राइट? Because of all
Right.
this, the inventory has gone up and almost 100 crores it is showing up on the inventory aspect of only,
तो
which is not
वो
a
भी एक ऑपरेटिंग लेवरेज है, कैश पोजीशन में उनका इम्प्रूव हो जाएगा आगे चल के.
uh, uh, if it does not prolong, right? It's a double-edged sword.
Yeah,
We don't know आगे क्या होता है. But if this prolongs for like more than quarter or two, then it might hit back. अगर एक दो क्वार्टर में
understood.
डिमांड आने चालू हो गया, रेड सी क्राइसिस समझो सॉल्व हो गया, अभी इतने एक साल से तो नहीं हुआ है, बट अगर हुआ तो दोस विल वर्क इन देयर फेवर. That is what I mean. कि global there are certain micro conditions and noise now which needs to be sorted out for Vishnu Chemical to fly. Those have to come into play. तो एग्जीक्यूशन
And
मैनेजमेंट के हाथ में जो है वो तो सब कर रहा है, बट देन देयर आर स्टिल
mhm.
डिपेंडेंसी ऑन एक्सटर्नल फैक्टर्स. That is why that inventory wise 100 crore plus it has gone up.
Okay. And what is the export share of revenues?
Today it is 45%.
45. Okay.
Yeah.
That's all.
Just FI exports has uptick in the last month, if I'm not wrong on Vishnu.
Yeah, because उनका precipitate barium sulfate का ये आ गया ना,
Right.
plant आ गया, और अमेरिका में Elementis is the one which closed its shop for that, the precipitate barium sulfate का. So part of the orders came into Vishnu Chemicals, it flowed into that. That is why now USA will start showing the uptick there.
Right.
Last 2 quarters का वो story.
Right.
Is Deepak Nitrate not a competitor?
नहीं, it's a total different field altogether, right? Chromium और barium segment में नहीं है.
Okay.
More into phenol, I guess. Deepak.
Yeah, phenolitics का ही है उनका पूरा story. Phenolics में जाएंगे तो दीपक नाइट्रेट is the champ. The whole thesis of Vishnu Chemicals right now is it is belongs to a sector which is in the doghouse right now. So valuations are not run away. बहुत ज्यादा भागा नहीं है वो. But at the same time, I can see some green shoots showing up on the horizon, right? The other things are the global some factors which are falling into place. अगर वो बैठ गया और केमिकल सेक्टर जो बॉटम हो गया है अभी, व्हेन आई से बॉटम हो गया कि यहाँ से नीचे जाना अभी मुश्किल है क्योंकि जितना नुकसान होना था हो गया. इट हैज ऑलरेडी टेकन द ब्रंट ऑफ द अटैक. Many of the chemical stocks, if you look at it, they are 40%, 60% down. So you are getting at a good valuations, and the other things fall in place, and the thesis kicks in and plays out. This will enter a stage 2. So at good valuations, you can get it now. The $1 million question is कि वो कब होगा? Coming quarter में होगा, next quarter में होगा? Not sure, but I am willing to wait for a quarter or two. 2 quarter, 3 quarter तो easily दे सकते हैं. Because when it runs up, I have seen the run up. I have, thanks to Puneet, when he had brought this stock to our attention. No, I had participated in that. वो ऐसा, it had a tremendous run up. वो chart में भी, if I look at you, I will show you here. No, can you look at it here? The climb over from year to year before the chemical sector kind of like went into bear market. It's just simply that.
They have split it as well.
Yeah, 1:5 split तो हुआ है, but chart doesn't technical chart में doesn't matter. No?
Yeah, it was bullish. They gone 10x. From there, it gone to
1:5
split
का split
होके.
आया था उसका. Yeah.
So last time you presented on GPIL, I guess, Godavari Power. It ran very well, and in that you also mentioned that 2 other players like Sandur Magnesium, and we can play around that. These were the good. This time, do you feel that apart from Vishnu, any other 1 or 2 chemical who were the leaders?
Chemicals, there are many names which are kind of like see, Vishnu Chemicals is very specifically into chromium and barium, right? अब वो इंडिया में नेशनल लीडर है, उसको कंपटीशन ही नहीं है, तो उसका इंडिया में पर से पेयर नहीं है. बट विद इन केमिकल्स इफ यू लुक एट इट, शेखर मेंशन्ड इट टुडे, राइट? आरती इंडस्ट्रीज इज वन व्हिच इज लुकिंग एट, जो हो सकता है बिकॉज दे हैव बीन अगेन बीन इन द डॉग हाउस फॉर टू लॉन्ग एंड दे आर ए पेडिग्री कंपनी, और जहाँ पे थिंग्स आर काइंड ऑफ लाइक दे आर स्टार्टेड गेटिंग द टेलविंड्स. तो जिस दिन टेलविंड्स आ जाएगा, केमिकल सेक्टर कम्स आउट ऑफ दिस टाइम वाइज कंसोलिडेशन, there will be many chemicals which will be chemical stocks which will be flying. No?
I think Phenetics chemicals can still do well because they don't have competition from China.
Yeah, and the second thing उसने कैपेक्स करके उसका कैपेसिटी ऑलरेडी काफी बंद करके रखा ना, तो दीपक नाइट्राइट is definitely will benefit if the chemical sector starts running. But top of the head, like different. See, when I say chemicals now, within chemicals based on there are like so many subgroups. अभी if I look at गुजरात फ्लोरोकेमिकल, वो ईवी के लिए बनाएगा और ये तो वो एक अलग से भागेगा. SRF is always a master in the coolant space. So these are the companies which one should focus on. So they are biding their time. The moment they get the tailwind, then the run up starts. So SRF,
chemicals,
DFL, Deepak Nitrite, Aarti Industries.
So
There is
chemicals is a
one.
very big space. You should divide chemicals into basic category of chemicals like commodities and specialty chemicals. And where
No,
we
but
should
within
focus
specialty
is
also there will be
specialty.
multiple
Yeah,
subspaces, no?
I'm coming to that. So now we
Yeah.
should only focus on specialty chemicals. Basics you should not touch at all as a group. Only specialty chemicals. Now specialty chemicals again are specific to industries. For example, Pheniotex for textiles, PCBL for something towards carbon black and your automotive side, tires. So similarly, this is for chromium. So find out an industry which is trying to grow like 20-25% for 4 or 5 years continuously. You will definitely find good names out of that.
So Amar, there is one another company named, Sudarshan Chemicals. They have been, again
वो dyes and
doing.
pigments में है वो.
Yeah, it's their pigment and dyes. They are doing it, wonderful, and I believe they are third world's largest. But recently, the second number company got defaulted. It was based out of Germany, so they automatically become number two, and it's shown on the chart as well. At the same day when this second number company defaulted, Sudarshan was expected to do better than ever before. So I think this is one another company as in the track list. Whenever
Yeah,
the
yeah. But
cycle.
what has happened now? This story has already taken place at Sudarshan. If you look at it, last year का अगर मैं देखता हूँ ना,
Mhm.
it has already has a good run up. तो एक ईयर में अगर मैं देखूंगा तो almost 100% उसका appreciation हो गया.
Right,
From the
right.
levels of 500, it has gone to 900.
Mhm.
So for that, actually, I have a little bit different plan. I will come across to all of you. So this is more based on sectors, right? Chemicals, and yesterday I'm discussing with somebody else on renewables. So we'll plan a kind of a Twitter space where we can have general discussions about the names and what they're doing. Basically, these sessions let's be limited to specific names. And if it is peer, we should be open, but general discussions will take a lot of time, right? It will never be ending
Yeah, yeah.
that way. So we'll plan it separately. Basically, I understand that part also needs to be taken up, and I have definitely certain plans for it. So, any questions related to Vishnu, you can ask Amar. Otherwise, we are almost at the fag end of session today. And Amar, by the way, you are the winner of morning quiz. I have put in the group
Oh,
already.
धन्यवाद. Thank you.
So Yogesh and Sujay were very close, but you nailed it fast. Okay, so I put up a link for the ratings for today's session, 6 solid presentations. Please rate the presenters. It will help us to refine our presentations. It will help us to refine our thought process. That's the whole motive out of it. Please, it will not take more than a minute or two for you.
You have put it on the link on the chat, is it?
Yeah, I
Vishnu?
put in the WhatsApp group. I have put it in the WhatsApp group.
अच्छा,
directly.
WhatsApp group. Okay.
Yeah.
And last time the system didn't. It forced me to enter rating for myself also. That is the case this time also, okay?
No, you can put it. Actually, I have not put anything restriction. You can put it for yourself.
No, I don't want to put it, but it didn't allow me to keep it blank.
No, but I
क्योंकि
cannot
self-rating
have
करना
that.
इसे waste no.
No, but that's fine. So one rating
Okay.
out of 60, 70 doesn't matter, right? It will not influence the results.
Yeah, true.
Yeah, fine. We should self analysis also we should do, right? Where are we? Yeah.
Yeah.
Okay. So very
So-
good, guys. We have taken a good step today, and I'm waiting for the tomorrow's presentation. I'm just charged up now, and I've got good stocks to analyze as well. Thank you.
Thank you, everyone. Great presentations.
So we'll
Thank
meet
you all,
tomorrow.
guys.
Tomorrow 9:55 something. We'll start 10 o'clock. We'll start on the presentations. Okay.
Yeah.
Thank you, guys.
Okay. Bye.
Thank you.
Thank you all. Bye.
Thanks, all.
Thanks,
Thanks,
everyone.